Okay, let me say something crazy. What I found really interesting was that we had Ontario putting tariffs on hydropower, right? And then all of a sudden, moments later, like a day later, it was taken off. And then now the negotiation has started to happen between Ontario and the U.S. What do we make of that? Like, do we make of the fact that like any retaliatory tariffs won't have any teeth because it's all a negotiating ploy and that Trump is going to get them to the table no matter what?
Well, you know, I'll say, look, that's the primary objective, is to get them to the table and to negotiate. But also, if you look at the Canadian steel and aluminum tariffs, you know, President Trump's Truth Social statement said, look, we're going to 50%. Subsequently, we're now at 25%. So that tariff did actually take place. But, you know, this process, I think, continues exactly how it's been for the last few months. President Trump puts out a statement, says we're going to do this. Markets react to it. There's a negotiation. Sometimes just hours later, it's walked back. And there's additional open doors and additional nuggets that says maybe this isn't going to happen. But incrementally, tariffs are being put on place. That 20% tariff on China, for example. So, you know, if investors have not already looked at the supply chain aspects of the companies that they're looking at, they need to do so now, because we can't say with 100% certainty that these tariffs aren't going to happen. So investors need to be prepared for that supply chain disruption or the tariff hit as a result of it.
All right, Nathan, let's be a glass half full type of view here and say the government will not shut down. What are the next couple of things on Congress's to-do list, do you think?
Well, you know, Speaker Johnson is really trying to push forward with this House reconciliation package to extend President Trump's tax cuts. This was going to cost around $4.5 trillion to extend those. Now, they have to do it by the end of the year. If a government does shut down, nobody's allowed to work on that. And so the Republicans essentially would not be able to work on that until the government reopens. Now, assuming the government reopens, Speaker Johnson even just said this morning that he hopes for all of this to be resolved by May. I'm not exactly sure that they're going to be able to get there, because even though the Republicans were unified yesterday in terms of keeping the government open in terms of a budget, it was only a 6-month continuing resolution, and it was a clean-ish bill. That's much different than asking New York State Republicans, are you going to support not giving much in terms of SALT relief? Or asking other folks, are you going to support taxes on tips, which potentially could drive the deficit even higher? So the Republicans have to figure out, because there's no Democrats involved in this, the Republicans are going to have some very strong and powerful conversations, and I'm not exactly sure that's going to take place in May. I think that's going to bleed throughout the summer. So, but that work will continue next week, assuming the government stays open.
Again, I was just at an energy conference in Houston for a couple days, and the theme is that CEOs are really confused. People are not pulling projects, but they're definitely pressing the pause button on many, many things. Is the administration listening to CEOs?
I think so. I mean, obviously, President Trump met with the Business Roundtable yesterday. This is a collection of large CEOs from, Fortune 500 companies. And, we heard through reporting that was the message that President Trump gave. But I would also say that President Trump is very, very much a believer in his strategy at the moment. And I don't think there's much that the business community is going to be able to say to change his mind. I think that it has to come from sticker shock from prices, because prices are what drove a lot of voters to President Trump in the November elections. And prices is something that a lot of American consumers, especially Americans that don't have access to the markets or don't have assets in the markets, want to see from President Trump. And so I think that price discussion, as we'll see over the next few months, is what ultimately may change President Trump's mind. But then again, he also likes seeing the stock market in the green. So, again, it's very hard to predict.
Did we get any meaningful news out of that meeting yesterday with the business leaders, Nathan?
No, not that I would say to any of my clients. I think it was just more of the same, that, business leaders were saying, look, we're looking for deregulation. Deregulation is not a magic wand. It's going to take time. I think there was a lot of sentiment around the election around deregulation. They're looking for clarity on tariffs. I don't think you're going to get that. I think the strategy of strong statements subsequently with negotiations. And then they're looking for clarity on this tax debate. And, the problem with that is that it's just going to take a long time, because, they have to figure out how to pay for $4.5 trillion in tax cuts, or they have to figure out a way to keep it as less impactful on the deficit as possible. And so I don't think there was a lot of clarity coming from the White House to the business leadership. I think it was business leadership talking points going to the White House.
How much do you think all this is currently reflected in the equity prices, or in equity prices?
I think it's beginning to be a little bit more and more. I mean, because I think the realization is that, look, this isn't exactly turning out the way that I think a lot of investors thought after the election in terms of sentiment. The tariff discussion, I think a lot of people presumed that President Trump was going to back down on it. And look, he may, but President Trump is certainly asking some very difficult questions of the market when it says, look, starting tonight at midnight, I'm putting on a 50% tariff, and then 2 hours later saying, no, maybe not. We're going to negotiate instead. Markets don't like that. So I think what we're seeing right now is just this uncertainty. And per your point about, pausing a lot of projects, I think a lot of investors are just saying, look, we need clarity on what's going to happen here. Otherwise, we're going to begin to really try and protect our positions. They're not there yet. But if this uncertainty and this volatility continues from the political landscape, I wouldn't be surprised if investors react in a different way in the next few weeks.
Nathan, thanks so much. We appreciate that. Nathan Dean, our man of reason down there in Washington, D.C., helps us understand some of these policy moves coming out of Washington, D.C. Nathan Dean, senior policy analyst for Bloomberg Intelligence, joining us from Washington, D.C. Looking at the markets here, S&P is off about 11 points. That's 0.2%. The NASDAQ up 50 points. That's 0.3%. So difference there. The Dow off 329 points. That's 0.8%. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. A rally in stocks has lost strength. We have got the Dow and the S&P both trading lower, and this Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. The Dow and the S&P both lower now, with the S&P down 12 to 5560. We're off session lows, but still down 0.2%. The Dow now down 363. That is a drop of 0.9%. NASDAQ, the composite index, holding on to a gain of 64 points, up by 0.4%. The NASDAQ 100 index up now by 0.3%. 10-year 4.29%. The 2-year 3.96%. Gold up 0.3%. 29.24 the ounce, and West Texas Intermediate crude up 1.7%. 67.41 a barrel. Goldman Sachs strategists have lowered their year-end target for the S&P 500 index to 6,200 from 6,500, citing reduced GDP growth forecasts and higher uncertainty. The consumer robotics company iRobot is plunging after raising a substantial doubt about its ability to continue operating. Right now, the stock is down about 34%. iRobot, perhaps best known as the maker of the Roomba vacuum cleaner. It was also a one-time Amazon takeover target. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. Alex Steele and Paul Sweeney. We are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast Live, and that's where you'll find us here. Mixed day in the marketplace, as Charlie was just reporting. A lot of folks are trying to get a sense of, is this the dip I should be buying, or do we have more to go? So we'd like to speak to some folks who kind of do this stuff for a living. That includes our next guest, Shanna Sissel, President and CEO of Banrion Capital Management, joining us, I believe, from Chicago via Zoom. Shanna, thanks so much for joining us here. How are you kind of viewing this market activity we've seen over the last several weeks? And how do you what kind of conversations do you have with your clients about these markets?
So you guys have me on here regularly, and you know that I've kind of been anticipating that there would be something like this happening. In fact, I've often commented that the straight up movement of the market didn't necessarily make sense to me. I think having sell-offs and downturns are healthy things that markets need to stay in some balance and not get overheated. So a sell-off like this is to be expected. We haven't seen one in almost 5 years at this point, and to that extent, I actually think this is a great buying opportunity. Now, that said, there is some economic data that has been a little weak. And that is more cause for concern, because that could suggest that this could be a prolonged downturn. And if that's the case, it may be warranted and it makes sense to maybe sit on the sidelines a little bit and kind of let that go through the cycle and then kind of dip your toe back into the markets.
So you mentioned, where does it make sense to buy the dip, and what is that time horizon then? As in, like, you don't want to do it for a quick trade, clearly. Right. So, a lot of discussion has been had about certain factors of the market and sort of the transition from the momentum and growth names into the value names and this rotation that's going on. Also from domestic to international, as international stocks have done better. And that is causing a lot of transition in the market. And then once we kind of get through that rotation, it's a better time to kind of start to look at the factor performance and kind of take your bets. With that in mind, I invest based on long-term trends and things that I think will win in the long term. And so I look at opportunities like what's going on and see names like NVIDIA and some of the larger tech names sell off very hard.
and come down to multiples that we may never see again, particularly NVIDIA coming down to a multiple it hasn't seen in decades. And for those reasons, I'd be looking at some of those names to position in my portfolio, but I would be cognizant of the fact that value factors are starting to work. These tend to be cyclical trends where you see 10 years where one factor outperforms another. An example of that is going into the financial crisis. We had a long period where value stocks did better than growth, and it's since then that growth stocks have really taken off. And so I think you want to be looking at some of the names that have been overlooked. Financials and healthcare tend to do well in a stagflation environment, which is a real risk right now.
Shana, where I know you have a lot of experience in alternative investments, private equity, private credit, hedge funds. Mm-hmm. When you see volatility in the public markets like we've seen over the last several weeks, how does that impact the private side?
Well, on paper, it doesn't. As Cliff Asness likes to call it, volatility laundering. They don't have to mark to market. So you don't actually see volatility come through in the private markets in a visual way. But that doesn't mean that if they had to mark to market that they wouldn't see the same kind of downturn. Just from a behavioral finance perspective, clients don't have that in front of them all the time to make knee-jerk reactions, and that can be a good thing. The private markets tend to be just as damaged by these types of things as well, but they also tend to be the place where you can get your outsized returns as the market turns down. Things like distressed debt always are strong coming out of a market downturn and economic weakness. Private equity is usually not a good place to play until rates come down, but private credit can be really attractive as the banks tend to tighten their credit standards in softening economic conditions. And then if you want more liquid options as ways to provide a hedge for your portfolio, one of the ETFs we've talked about in the past that has shown exactly why you'd want to own it is BTAL, which is the anti-beta fund by AGF Investments. It's long, low beta names and short, high beta names. And that ETF in particular has done really well recently as volatility has increased. And if you are thinking that volatility is going to increase, the two areas in the more liquid markets that you can get ETF exposure are going to be things like that, but also anything that uses option volatility as part of their investment strategy. So like a MRSK or something to that extent would probably benefit as well.
All right, Shana, thanks a lot. Really appreciate it. Shana Sizzle joining us from Banyan Capital Markets. All right, let's go to the housing market. Looky here, mortgage rates dropping for a 6th straight week.
Yes.
Lowest since December. I want to get a check-in here as we sort of enter the spring selling season. Erica Edelberg is Bloomberg Intelligence Chief Mortgage-Backed Securities Strategist. Erica, just set the stage for us, right? Spring is usually when the selling season really, or buying season, I guess, really picks up. What's the state of the housing market right now?
You know, we're still, I mean, the data that we have is a little bit lagged because things like pending home sales and existing home sales are still based on January data, which is slow. We have seen improvement year over year in existing home sales, but pending home sales, which is a little bit of a newer indicator, showed that they had actually fallen year over year in January. So lots of mixed indicators. The purchase loan index out this morning, application index from MBA, does show that we're above last year's levels finally. But this is all relatively low. I mean, last year for existing home sales, I think was the lowest year in decades. So
I mean, it's just the affordability issue remains just incredibly challenged. The pricing housing continues to, or remains at very high levels, yet the cost to borrow remains higher than most people are comfortable with.
Right.
There, you know.
Yeah. Well, a couple of other interesting statistics from the mortgage application index data this morning is that, you know, rates, as you said, I think they might have even been the lowest since October on that metric. You know, there's pretty wide variety depending on which originator and series you look at. But the purchase loan application sizes were the highest on record, I believe. So that just shows you that, you know, mortgage rates at 6.7 aren't exactly cheap, and then you have home sizes and loan sizes going up. The other interesting statistic is that the number of people applying for adjustable rate mortgages has been ticking up just a little bit.
Really?
Yeah, we noticed that this morning. So something to keep an eye on. if you don't have such a long time horizon, you might be able to get maybe 50 basis points lower interest rate. Now that the yield curve's at least, not as inverted as it was.
When do you think we get a pickup in refi?
Well, this is interesting.
I guess
also.
it depends on like where you bought, but still.
It depends on where you bought, exactly. So, for Paul, I don't know when that happens for Paul.
I'm sitting at my 6% mortgage. I can live there.
You're feeling good about that.
I
these
do.
days.
Exactly. I'm no Alex Steele, but I mean.
But there were plenty of people who took out, not a large number, but people who took out loans last fall,
expecting
for instance,
to refi.
Expecting to refi, and they're going to be extra eager to do so. So, one of the interesting thing is because their loan sizes are larger, they actually have more incentive to refi as quickly as possible. Plus, they probably feel like they top tick the market. So the other interesting statistic that we would pull out from today's mortgage application data is that the average refinancing loan size is also a lot higher and a lot more in line with recent loans. So that tells you that these are people who probably took out their mortgages back in, let's say, November, December, when rates were just a little higher and are already looking to refinance.
All right, I'm looking at my Go function, Bloomberg Index browser. It gives me total returns year to date for various fixed income categories. In the United States, guess which one is the best performer?
Maybe mortgage-backed securities.
Mortgage-backed securities,
Exactly.
2.55%. How about that?
Yeah.
So what's driving that?
So what's driving that is that I think a lot of it has to do with rising recession fears. And mortgage-backed securities don't have the same credit exposure because, they're guaranteed by Ginnie, Fannie, and Freddie. So as a result, something like corporate bonds, where you're worried about profit margins getting crunched by tariffs, for instance, and, general demand for their products being reduced by recession potentially. I hate to say the R word, but weaker economics, that can affect corporate bond spreads more than mortgages, plus corporate bond spreads that arguably gotten very tight relative to mortgages over the past year or two.
Are we potentially looking, though, at Fannie Mae, Freddie Mac being privatized? And does that change the scenario, the setup for investors?
Well, it was certainly a hot topic at the SF Vegas conference I attended a couple of weeks ago.
Which conference was this?
It's the Structured Finance Las Vegas conference.
That sounds fun.
Dang, that is a title.
There were over 10,000
Oh my
people there.
Wow.
It was insane, and that just includes the registrants. Really hot topic. Everybody looking for something to buy, something to invest in. And, the biggest question I probably got asked on top of, what do I think about the potential for tariffs and things like that affecting the economy and mortgages and housing is the privatization question. And, it remains a very live question. I mean, I think most of the top experts in the field feel like there's just a lot of obstacles to overcome in the next few years. But, never say never. The current administration has shown a tendency to break things and ask questions later. I think, in general, mortgage investors would prefer that we maintain the status quo until at least more stability can be implemented.
Right. All right, Erica, thank you so much. Appreciate it. Erica Edelberg, she's the Chief Mortgage-Backed Security Strategist for Bloomberg Intelligence, joining us here in studio. We appreciate that. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We do have the S&P 500 index trading back in the green, up 0.2% right now. However, a down day for the Dow Jones Industrial Average. The Dow is off 204 now, down 0.5%. The Nasdaq Composite Index up 152, up now by about 0.9%. Stocks did trim their advance after Canada announced new tariffs on American-made items. The 10-year 4.30% with the 2-year 3.97%. Spot gold up $11 the ounce, $29.26, up 0.4%. And West Texas Intermediate crude now rallying 2.2%, $67.71 on WTI. Bitcoin down 1.5%, 81,530. So a choppy session today. As for the market backdrop and the ongoing selling that we have seen, Shana Sissel is president and founder of Van Ryan Capital Management. She was a guest moments ago right here on Bloomberg Intelligence.
Having sell-offs and downturns are healthy things that markets need to stay in some balance and not get overheated. So a sell-off like this is to be expected. We haven't seen one in almost 5 years at this point, and to that extent, I actually think this is a great buying opportunity.
Shana Sissel of Van Ryan. Moments ago, we were also talking about mortgages. The average U.S. 30-year mortgage declining for a 6th straight week, according to the Mortgage Bankers Association, now at 6.67%. Among home builders, Toll down 0.6%, KB Home down 2%, and Lennar down 2.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. So we are back here, and for me, St. Patrick's Day is the first day of spring.
That's today, right?
It's Monday.
Okay.
Okay, so I'm just saying it's my first day
Wait,
of
are
spring.
there parades and stuff this weekend?
Yeah, and there's
Nice.
been parades. We've been going to parades the last few weeks. So my question for Mike McGlone, who covers all the commodity stuff for Bloomberg Intelligence, he's down there in Miami Beach. Mike, has the snow bunnies, have they started to return back north, or are they still down there in South Florida?
Yeah, they're still down here. March is probably peak season, certainly for spring breakers. They usually head up north around April, and I like to say when the tulips start popping up in April, the snowbirds head north.
All right, so you still got a tougher time for the next month or so getting reservations. Hey, Mike, we've seen this tremendous amount of volatility, particularly in the equity markets, as it relates to tariffs and maybe some of the economic uncertainty that may bring. What are you seeing in the commodity space these days?
Well, the main thing from the U.S. standpoint is glut versus deficit. We have a significant glut of grains. So there's pressure on the grains. They haven't gone down a lot so far because drought risks are picking in. That mostly means corn and soybeans. But we have a deficit. We import about 50% of the copper and the aluminum we use. And so that's where the market's really been kicking in. And the main thing that's really been noticeable for me is the copper spread between copper that trades in the U.S. is right now about $4.86 a pound. On a closing basis, the highest ever on a month-end basis was $4.84 a pound in March of 2022, right after Russia's invasion. So it's at those key levels, but it's very much up a lot versus what's copper that's traded on the LME or in London. It's that big spread because of tariff issues. The key question is usually, and even industrial metals, the Bloomberg Industrial Metals is up, index is up 10% this year, and usually that's indication of demand pulses kicking in, China kicking in, U.S. stock market going up, but it's not. So the question is it going to be a feint? Is it going to just drop back down, or is this enduring? I think tariffs are just distorting things for now, and it's making copper look bullish, when it's probably more likely to head back lower, although it keeps ticking up against pretty strong resistance levels.
Talk to me about the volatility in the equity market, putting aside like the last 24 hours. How has that affected commodities? Like, which are the most hit? Where's the most action?
So the key thing for me there, Alex, is first of all, volatility in equities is just recovering for almost a 10-year low if you measure the VIX on, say, a 52-week basis. So that's the thing that Trump has against him. Usually when volatility goes up, it's almost always good for gold versus all commodities. And that's the key thing that's happening. On the year, gold's up about 11%. Bitcoin's down about 13%, and the S&P 500 is down about 5%. So volatility going up in the stock market means risk assets going down. Bitcoin's very risky. Gold's not risky. And also we see bond prices starting, yields going down, prices going up. The question is, does it end? My statement is, I think this is just the beginning, partly because Mr. Trump has this pretty significant agenda. We know he's sticking to it. And it's happening with markets at extremely elevated levels. The U.S. stock market was very expensive. Stock market cap to GDP, we know, is almost the highest ever at the end of last year, and certainly the highest ever versus the rest of the world. And volatility is just starting to bottom. So I look at these kind of crocodile patterns of gold going up and stock market going down is just getting started. The jaws of the crocodile are just starting to narrow. Yeah, there's going to be nuances, but to me, it's just getting started.
So here's a dumb question today. LME aluminum, or aluminium, as they say over there, it's up 5.9% year to date. Why is it not up like 25%?
Well, there you go. The key thing is LME aluminum, as they say in London, is a global commodity, and it's really industrial metal, but it's global. And the key question I like is, what part of raising tariffs on the rest of the world who imports to the U.S. is going to help the demand pool for aluminum? Sure, it's going to raise the price in the U.S., but for the rest of the world, LME, it's London Metal Exchange price, it's not a good sign. So I look at aluminum also has been one of those markets that's been trading in a range forever versus Dr. Copper gives you better indications. So that's why I'm more focused on copper, plus the spread in the LME and the CME. So overall, the key question we have to ourselves is, what part of the rest of the world having to pay higher tariffs to the best place in the world to export is going to help the demand for aluminum? I think overall it's a pressure factor. And that's why I think what's going to happen if the U.S. stock market keeps going down, the risk is almost all the industrial metals have pressure factor lower, which still keeps my tilt towards bullish gold, unfortunately.
Mike, you grew up out in farm country out there in the Midwest. How are the farmers thinking about all of this with all the tariffs talk?
They are worried. I was at the all-day agriculture outlook last week in Covington, Indiana. Have you been there? It's great. It's the best conference in the world. The conference costs $40. The food's worth $50. The key thing they're worried about is the number one thing is Brazil. Massive supply out of Brazil. A good example, to put that in context, this year, Brazil might export around 100 million metric tons of soybeans, and U.S. will export 50. The U.S. has been exporting 50 forever. 10 years ago, Brazil exported a lot less than 50 million metric tons. You see the trend there? Massive supply increasing. The U.S. has to export about 45% of its soybeans, 15% of its corn, almost 50% of its wheat, just to keep prices stable. So trade wars, if people start to reciprocate, that's a problem. We need to export our grains or else prices are going to go lower.
Okay, so what do we see then? So if the trade war is going to be definitely a negotiating tactic, other countries are probably going to diversify their chain as well in terms of their own imports. Is it government subsidies that are going to help farmers? Like, what's the policy here?
Well, ideally, the best thing can help is we see the rest of the country say, yeah, thank you. We appreciate you're the best place in the world to export. We'll lighten up a little bit on the tariffs we charge you and kind of balance the trade a little. That would be ideal. The worst case scenario is having to depend on more government subsidies. Farmers hate them. I mean, they have to depend on them, but they want to farm and make money and be organic with higher prices. And the key thing for this year is, unless we get a drought in the U.S., prices are probably going to go lower, get towards that low price curve, which is typically what happens. That's what I'm worried about. The good news is, I mean, in terms of prices, is drought conditions are starting to increase in the Midwest. It's early in the year. But the key thing they want is higher prices, which means demand pull exports, and that's just not likely.
All right. Before we let you go, Bitcoin has been all over the place here, but one could argue it's in kind of a trading range here, but how do you view Bitcoin here?
Downward, I think example is it just got way too expensive around 100,000. Too much speculative excesses. The key indication I'm using for Bitcoin is Ethereum, the number 2 cryptocurrency. It broke below key support at $2,000. The key thing I like to say about the whole space is it probably put in a pretty good peak last year. Yep. There's massive supply of cryptocurrencies, and I think dependence on Donald Trump for prices to go higher is just not a good way you want to be long cryptocurrencies.
All right, Mike, always a pleasure. Yep. He looks tan. Doesn't he look tan?
He looks,
He lived in
I can't
Florida,
even
one might be
imagine the
tan.
life he lived.
Yeah,
in these
speaking of the guy who's on the Jersey Shore who takes every Friday off
But
in the summer.
Mike's earned it. He grinded it out in the trading pits, the various things, and then he did BI here in New York for a while, so he's earned these.
No, we can still be jealous, though. All right,
Yes.
Mike McGlone, Bloomberg Intelligence Senior Commodity Strategist, joining us there. Really great stuff. I was in Houston, Texas, over the last day and a half for a week-long conference called Sarah Week. It's where all the energy CEOs, officials, energy ministers, you name it, are all there to discuss policy as well as make deals, etc. I was privileged to talk to the CEO of GE Vernova, Scott Stracek. Now, GE Vernova was spun off a year ago from GE. It's the gas and wind turbine manufacturer. So power generation, power grid, this is the company that makes all that stuff. The transformers that you plug into the grid to make all the power work, they make that stuff, them and 3 other companies. I sat down with him and I said, look, we have tariffs coming on. There's recession fears everywhere. Equities are getting hurt. How does this affect your business? Here's that part of the conversation.
We've certainly experienced stock volatility over the last 6 months, but the end market's not so much at all. No, I mean, just like we started the year, I'd say we expect substantial growth in both our gas and our grid backlogs. It's substantially higher margin than when we started the year. Continue to work on operationally improving our wind business. So that's the one end market that's a little bit softer for us. But certainly in our larger, faster growing businesses, really no change through the first 2.5 months of the year.
If we get tariffs on aluminum and steel tomorrow at 25%, how does that impact you?
At the end of the day, these are technologies that are needed. And this is also an example of where it helps to be a U.S.-based company. I mean, we only buy about 5% of our raw materials from Canada, Mexico, China that gets imported into the U.S. So we'll have to navigate through whatever policies come, but we feel like we can manage through those disruptions.
Do you have pricing power to push it through?
In the end, it doesn't mean in between now and then, there couldn't be some financial implications for us. But with only about 5% of our material buy being in those countries, we'll navigate through it. But we're not immune to tariff risks, but we're confident we can navigate our way through this.
So this has been a year for GE Vernova, quite a year.
Yeah.
It's been spun out from GE, and it's been quite a year in terms of AI and data center demand. What's been the biggest change for you leading the company in the last year?
Well, I mean, I'm proud of the first year, but most importantly, it's really just the beginning for us because a lot of these trends, whether it be AI, whether it be the electrification of these industries, it's really just starting. So our end markets continue to strengthen. I think there's a more reality-based focus on both the need for gas and nuclear. So the demand cycle for both of those continues to get even stronger today than where we were 12 months ago. And it really then comes back to how do we deliver safely and in a high-quality way to serve this incredible market that we're walking into.
I mean, your backlog is huge, right? It's like $73 billion, right?
Sure.
Can you give me perspective, like how much of that is AI demand driven? How much of that is like wind stuff? How much of that is transformers? Which is the stuff you got to plug into the grid?
You bet. It's still a very small proportion of our backlog is directly attached to AI. I mean, when you really think about even data centers in total, there's only about 60 gigawatts of data centers globally today, and only 15% of that's really explicitly related to AI. Most of it's still cloud and storage. So that's why there's so much growth to come, because we're really just starting. But I'm sure us sitting down a few years from now, it's going to be a larger proportion of our backlog.
How much do you think it would be? Best guess?
Oh, it's going to be a lot more. There's no question about it. No, I don't think we get to that proportion, but it's going to become more AI-centric, and it's becoming even more US-based, because the amount of growth that we're going to see in the US the rest of the decade relative to the rest of the world, it's going to be more tomorrow than it's certainly been the last 5 to 10 years.
In the meantime, you cannot get a CEO on the stage at Sarah Week that isn't talking about GE Vernova, because everyone's buying your gas turbines at the end of the day. How much of this is firm contracting? How much of that is just like, yeah, we like it, we're going to buy it? Can you give me some insight into that?
Well, we're very firm in contracts, certainly with our gas turbine, our transformer, our switchgear backlog, really through 27 into 28 right now. I would expect by the end of the summer we'll be largely sold out through the end of 28 with those equipment. But we're also looking to kind of find ways to get better every day and a culture of continuous improvement. And if we can increase capacity smartly as we figure out this ramp, we'll do that. But for context, last fall, we announced a really almost 35% increase in supply from 25 levels to 27. So 35% increase is a lot. It doesn't mean we stop there, but we've got to get there first to then reevaluate what the art of the possible really is.
Okay, so to that point, what are the issues with execution then? Like, it's a lofty goal, right? You're investing $600 million to expand plants in the U.S. It's a lot. How fast can that happen, and what are the roadblocks for you?
It's got to happen in the next 2 years. You know, really, this company is going to look very different between now and the summer of 26.
What's the biggest hurdle for you to get that done? Workers, prices?
We're going to add over 1,500 employees. That's a combination of engineering and craft labor. That's all in the U.S. Take gas as an example. We've got to add over 500 heavy-duty pieces of machinery into our global factories to drive this growth in this ramp. So that's a lot in existing factory footprints. We're highly capable of doing it, but it's a lot between now and, let's say, the 4th of July of next year.
Yeah.
So I like our chances, but there's a lot of work to do.
Talk to me about the win part, okay? Because that's sort of like the cousin no one wants to talk about right now, right? Or the uncle. If someone came to you and said, hey, Scott, I'd like to buy your wind business, would you be like, yes, take it off my hands?
No, I don't think it's that simple.
Okay.
I think at the end of the day, we've got a big onshore wind business today. Even in the U.S., we have over 35,000 wind turbines that are spinning, creating electricity today. We see real opportunities to repower that existing install base using the infrastructure that's already been built, but putting longer blades onto the wind turbines that helps the world. We think there's a role for wind, and with that role for wind, we're focused today on just operationally running this business better every day, waiting for the growth and inflection that comes. So we really are a believer in an all-the-above technology suite. But we'll also look at our portfolio every day with a steely eye on what creates value for our shareholders, but there's no binary yes or no answer to that question, but we're focused on running these businesses better and ultimately creating value.
All right, so sticking to the wind. The other part of your business, which I think is so cool, are the transformers, so that you can have all the wind farms you want, all the solar that you want, but if you have to plug it into the grid, so I think of it as like a big socket. I'm sure it's much more complicated than that, but talk to me about the growth there, because everyone talks to you about AI and data demand, but like that's where the potential growth is. Walk me through the percentages.
And that's also for context where a lot of our first interactions really came to be more intimate with the hyperscalers. I mean, we did over $500 million of direct electrical equipment with the hyperscalers and orders last year with transformers, with switch gears attached to their data centers. That's a business that we see substantially growing from here. 2 years ago, our backlog coming into 2023 was about $6 billion equipment backlog. It's north of $20 billion today. So
what's the growth rate?
It'll stay growing. Our backlog certainly will grow at that same level for another year here at expanding margins. So this is, I think we can have debates between nuclear, gas, wind. What are the power generation sources that are going to power the world? Regardless, we need to invest in the grid.
Yes, and that then leads us to transformers. Before I let you go, North America is what, like 20-25% of your business right now. Uncertainty is quite high. We saw it with the NFIB, a survey today of small businesses. Is now a good time to invest in the U.S.? And what part of that business do you think it could be in the next 5 years?
I think it's a great time to invest in the U.S., yes. We've gone through multiple decades with very little load growth, and it's really impossible to underwrite a case that we don't need substantially more electrical equipment and supply here over the next decade. And yeah, that's data centers, but it's not just that. We're reindustrializing parts of the U.S. to an extent that is going to require more electrical load, you know, EVs, home heating. There's a lot of other factors, and beyond that, we just need to modernize what we have for resilience and energy security.
How big of a percentage could the U.S. or North America be in your portfolio in 5 years?
It's going to grow as a proportion for sure, but it's not the only market. We're continuing to see real growth in Asia and in Europe, but we're very bullish on the U.S., and we're going to keep investing in the U.S. You cited the $600 million and 1,500 jobs attached to that, but that's not the end. That's just the beginning as we continue to serve this market.
That was Scott Straczyk. He is the CEO of GE Vernova, and that was just a touch of the many conversations, which obviously bullish power in a big, big, big way for all the power players. You know, the oil companies are having a tougher time because of the tariffs and what it means for global flows and all of that, particularly if we see a peace deal in Ukraine, what that means for gas flows. But, you know, they're managing.
Is the expectation, if there is a peace deal, that the Russian gas, I mean, the oil and gas coming out of Russia, that we don't know where it's going, but we know it's out there, but...
Expectation is, well, Europe's still buying some gas from Russia. Okay. The real thing is about the gas. The oil will be dictated more by OPEC+. The expectation is that gas will come back online in Europe more, but not to the way it was. That's the official line. We'll see what actually winds up happening. Have I bored you yet from
No, I
energy
love that stuff.
conversations?
I'm all in. I'm all in down there.
Well, he'll be bored by Friday, I promise. All right, that wraps it up for me and Paul on this Wednesday. Taking a look at a market where there's not a lot of craziness, considering what we've seen over the last couple of days. The NASDAQ is now up by over 1%. Pretty high volume there as well. Balance of Power with Joe Matthew is up next after this global news update. Happy Wednesday.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Canada and Europe retaliate, slapping their own tariffs on U.S. goods after President Trump's new tariffs on steel and aluminum.
I'm Vicky Barker at the Foreign Desk in London. Skippy Peanut Butter. Europe's tit-for-tat tariffs will hit American peanut butter, blue jeans, bourbon, Harley-Davidson motorcycles. EU leaders aiming primarily at industries located in red states. Canada has just announced its own retaliatory tariffs. Even staunch U.S. ally Britain is wavering. Prime Minister Keir Starmer now saying he's keeping all options open.
The latest government report indicates inflation slowed a bit last month, but CBS's Jill Schlesinger says not so for eggs.
Egg prices were up by 10.4% in just 1 month. Year over year, egg prices are up by 58.8%.
Reports say 1,000 workers are being fired at the National Oceanic and Atmospheric Administration. The toll is higher at the Department of Education.
More than 1,300 employees are getting layoff notices, which Education Secretary Linda McMahon told Fox is
the first step of eliminating what I think is bureaucratic bloat.
A move that infuriates the National Education Association president.
The Trump administration is working to destroy public education.
Becky Pringle says the president
is working to take money out of our public schools and give it to billionaires and take it away from students who need more.
Stacey Lynn, CBS News, Washington.
Court hearing going on in New York for Mahmoud Khalil, the Palestinian with a green card involved in protests at Columbia University, who was arrested by ICE. President Trump called him pro-Hamas on social media. CBS's Katrina Kaufman.
The government has indicated that it may use an obscure provision of the Immigration and Nationality Act that says the Secretary of State can deport someone if their presence in the U.S. is adverse to the United States foreign policy interests.
NASA and SpaceX are set to launch a mission to the space station today. Our space consultant Bill Harwood says success would mean two astronauts are closer to a long-awaited trip home.
NASA's launching a replacement crew that'll clear the way for the Starliner astronauts, that's Butch Wilmore and Sonny Williams, along with two station crewmates to finally make it back to Earth. NASA says the decision to keep them up so long was the best way to minimize disruptions to station science and to downstream crew rotation flights.
The mission for Williams and Wilmore turned out to be 9 months long instead of 8 days long. Wall Street, right now the Dow is down 117 points. The NASDAQ and S&P are higher. This is CBS News. 2 months after the LA wildfires, an elderly woman has been reunited with her missing cat.
The tearful reunion video has gone viral. Catherine Kiefer feared 5-year-old Aggie had died when their home burned down in the Palisades fire. Over the weekend, the West Los Angeles Animal Shelter called Kiefer to tell her they had Aggie, who was badly burned and starving and has already undergone several blood transfusions. A GoFundMe to cover Aggie's vet bills has raised more than $20,000.
Hi, Aggie. Hi, sweetie.
Michael Wallace, CBS News.
Authorities say a Pennsylvania man passing through security at Newark Airport was found to have a live turtle stashed in his pants. The TSA says it was detected after a body scanner alarm went off and an officer conducted a pat-down. The 5-inch turtle was wrapped in a small towel. It's not clear if the man is going to face any charges or penalties. I'm Steve Kathan, CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The Taoiseach comes to town just as the EU slaps retaliatory tariffs on the U.S. This could be an interesting day. Welcome to the fastest show in politics as we join you live from Washington with the Irish Prime Minister sitting down with President Trump as we speak at the White House, the first European leader to sit down on the Oval since President Zelensky had his fateful meeting. We'll get the latest ahead this hour from Bloomberg's Tyler Kendall. We'll talk about the market tantrum over tariffs, not to mention the impact of today's CPI report with the stalwart. He's in the Capitol. Joe Weisenthal of the Odd Lots podcast will be with us at the table in just a couple of minutes. The House passes a stopgap. They got it done to avoid a government shutdown. Now it's on to the Senate. We'll talk about that ahead with our political panel. It's all after a look at Wall Street. And we start there, as always, with Charlie Pellet in New York. Charlie, how's the market?
Good day, Joe. Right now, Joe Matthew, we are looking at a down day for the Dow. S&P, NASDAQ, they are both advancing, with the S&P up 26 now, up by about 0.5%. We've got the Dow down 119, down 0.3%, while the NASDAQ Composite Index pushing higher now by an even 200 points, up 1.1%. The 10-year at 4.31%, the 2-year 3.98%. Spot gold is advancing by $12 the ounce, up 0.4%, 29.28, while West Texas Intermediate crude rallying 2.2%, 67.73 on WTI. Bitcoin, meanwhile, down 1%, 81,940 on Bitcoin. Well, certainly anxiety around the impacts of President Trump's policies continue to roil markets. But what about the Federal Reserve after this morning's inflation data? David Kelly is chief global strategist at J.P. Morgan Asset Management. He says so much now depends on what's coming out of Washington.
The Federal Reserve is in a very difficult position here. Until we have some clarity on tariffs, they don't know how much of an inflation kick we're going to get from tariffs this year. And until we've got some clarity on the budget, they don't know how much fiscal stimulus is going to be kicked in next year.
David Kelly of J.P. Morgan Asset Management. You can hear more of that conversation on the Surveillance podcast. You can download it wherever you get your podcasts. And sources tell Bloomberg President Trump will be nominating Fed Governor Michelle Bowman to be the central bank's next vice chair for supervision as soon as today. Tesla is urging Delaware's highest court to salvage Elon Musk's record-setting pay package after a lower court judge rejected it twice. Tesla shares today, they're surging, rebounding by 7.3%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Welcome to the Wednesday edition of Balance of Power, the fastest show in politics, live from Washington here on Bloomberg Radio, on the satellite channel 121, and on YouTube, where you can meet us right now. Search Bloomberg Business News Live. Our live stream up and running all day from our studios in New York and in Washington, where it's all about the Taoiseach. In the Oval right now with Donald Trump, and we're going to bring you into that conversation as soon as we get our hands on the tape. You know how this goes. I think we've been experiencing this often enough, and they're following a similar path here that we've seen with other foreign leaders, Emmanuel Macron, Keir Starmer, and so forth. You get the sit down on the Oval, a little bilateral talk with reporters. We'll play that back for you. And then it's the East Room for the official Irish celebration. And that'll be live around 5 p.m. Eastern time, so in the late edition of Balance of Power. He's making news, though. This is peculiar timing, you might say, for the Taoiseach. Usually this is a celebration. We're here to just paint the city green and celebrate St. Patrick's Day in advance. But Of course, it comes just hours after our tariffs against the EU kicked in, and the EU now with retaliatory tariffs, slapping $25 billion in retaliatory tariffs upon U.S. imports as the trade wars escalate. So this is clearly going to come up. They're going to talk about Ukraine as well, I suspect, and we'll have a conversation about Ukraine with news coming off the terminal throughout the morning here. Vladimir Putin apparently eventually set to agree to a truce. Emily Domenech will be with us a little bit later on this hour, but there's something special we're going to do right now. This has never happened before. First of all, Odd Lots is coming out of D.C. tonight. If you haven't got your ticket yet, you still can. And that means Joe Weisenthal is in town. I'm pretty sure this has never happened, at least in the nation's capital, since I've been here at Bloomberg, the stalwart. He's with me at the table, of course, the co-host of the Odd Lots podcast. They even put a tie on. This is
Can you
wild.
believe this? Yeah, they put a tie on. I put the tie on. I put the tie.
You cleaned up a little bit. Is that? Are you feeling the Capitol? Because
I'm feeling the Capitol vibes. I'm like, okay, I'm very serious.
You're surrounded by
important
marble.
Things going on.
Yeah.
It's like, all right, I better put on the tie.
Okay.
Like meet the moment.
I want to hear about what you have planned for tonight, because I know hundreds of people are lined up to watch the taping of what I believe is Bloomberg's biggest podcast.
I think that's right, yeah.
That is right. I've heard about that from
You've heard
important
about
people. But I want to ask you about what the hell's going on in the market here, because it's not coming easy. And even an attempted recovery yesterday when the president pulled back on some of that fizzled. And you've got people, the charts are broken, talking about the beginning of something maybe a lot worse.
Yeah, I mean, it's a really weird time. I mean, it's great in our business. Let's be honest. There's plenty to talk about.
There is a lot to talk about, yes.
Let's just be realistic.
Job security.
For a second. There's plenty to talk about. But it feels like we're in uncharted territory because, even with the expectation that the new administration would be, take a much more tariff-friendly approach than the prior administration, we didn't expect from day one that the key targets would be Canada and Mexico. And the fundamental thing is we don't know why, we don't know what the ask is, we don't know what the purpose is, and we don't know what it's going to look like, and it seems to change by the day. And you hear this thing, businesses always say it. They see it, we want certainty. We just want to know the rules. We just want to know, and they usually applies to regulation.
Yeah.
If we have permanent, substantial tariffs against all goods coming from Canada and Mexico, then that's a serious long-term planning project to adjust for that. Well, what does it still make economic sense to buy from Canada and Mexico? What do we have to commit the billions of dollars to domestic supply chain? I think these are huge decisions that you don't make overnight, et cetera.
Yeah, right.
But in the meantime, we don't, they seem to change by the day. So you certainly can't plan anything long term until okay, this is the new fixed relationship, and it doesn't seem like we're anywhere close.
Is somebody making a lot of money trading volatility in the meantime?
I'm sure I'm sure that vol sellers of various flavors, trading desks who sort of basically benefit from sheer volume have done really well. But by and large, this is sort of the classic thing that investors don't like to see. And then there's another interesting dynamic, which is that even prior to the tariffs, there are reasonable arguments to say that the economy was already slowing down, that the labor market was softening, that there are conditions in place that otherwise would necessitate, okay, let's begin those Fed cuts again, except the Fed doesn't really know the impact of the tariffs. Right. And so even under all things equal, the Fed can't sort of look at this and sort of have its normal reaction function where it's like, okay, there's this slowdown, we're going to signal more rate cuts that balance things out. Because it really doesn't know what the inflationary effect on the tariffs are in the first order because of the impact on prices, and then the second order, what is going to be the economic effect of the sort of investment activity that would have to take to replace international supply chains. So very confusing time.
Very confusing, yet everyone seems to be feeling good or trying to make themselves feel good about this CPI today. Yeah. Does that then turn tomorrow when the first tariffs show up with the PPI?
Well, what I would say is right now, any snapshot in time obviously has no tariff effect. And what it does is sort of confirm this notion that prior to right now and prior to all of this confusion, the economy is on track for softening. And again, this gets back to the idea that, okay, the Fed can look at softening jobs data, it can look at softening price data and say, yeah, this is the playbook as we cut rates, and the market likes that, except for that tariff wild card. And so that normal relationship may not apply quite to the same degree as we would normally expect to see.
Yeah, well, this is an awfully difficult moment when we know more could still be coming.
Yeah.
So there's talk of capitulation.
Right.
What do you look at? What does that look like this time? Is it the VIX at 100? Is it the S&P 500 at 4,000? Or do these metrics not matter right now?
Well, I mean, I think in the short term, when you see a huge spike in the VIX, you could say, okay, maybe that means that we're in some sort of near-term selling point.
Yes.
That's what history usually says. In the medium term, the direction of the market will be determined by the direction of the economy. Ultimately, when we have like real sustained bear markets, they happen because of recessions. And so in the short term, a little panic, a little unwind. You have momentum trades that were really popular and suddenly they're not popular. And so entities that are short term in nature have to sell and maybe their selling gets exhausted. But in the end, like the market is determined by earnings and earnings are determined by the real economy.
Yeah, right.
And so, for any actual like capital I investor listening to this, the only thing that really matters for the stock market is what happens with the trajectory of the economy and earnings.
Yet what just happened since the inauguration is, I guess even the election is, my God, we just took the most incredible round trip
that's right.
of our lives here.
Right.
I don't know what we thought we were doing there for a minute.
Well, it's interesting because if you think back to when Trump won in 2016, there was a lot of perception that he would be bad for the market, the uncertainty candidate, right? And then famously that night of the election, stock futures plunged.
Yeah.
And then he was, from the market's perspective, of a great president. Lines just kept going up, and he passed tax cuts. And I would say his administration was what I would say sort of like a normie Republican administration. They did tax cuts and not really a whole lot else, probably some deregulation, et cetera, but not a whole lot else. And so I think when he won this time around, people remembered the 2016 playbook. He was great. And so it's like, oh, we're going to clear this big merger backlog that we have. And we're going to get deregulation. We're going to get tax cuts, all things that investors really like. And all the stuff about tariffs and the sort of America First agenda, I was like, he'll forget about that. It turns out that that's the priority from day one.
Oh, yeah, you're putting your finger on it here. And so
and
now
that
there's
turned
a
out to be
massive
the main
realization.
priority. And and even on the funny thing is, even on the merger front, which was supposed to be this big boon to Wall Street because all the deals were being held up, it doesn't even seem like there's been that much of a turn from the last administration on that in terms of green lighting and mergers. So it's basically the exact opposite of what investors were thinking about all from early November to sort of late December.
So you're glad you didn't buy animalspirits.com because everybody was just looking at
that's
that
right.
and what they were going to bid that sucker up.
Anything that was sort of speculative in nature, whether we're talking Tesla, crypto, whatever, just NVIDIA, all of it went to the
Launchpad.
moon.
So let me ask you then about creative destruction.
Yes.
Because that's kind of what we're hearing about, right? Short-term pain, guys, but we're resetting the dial here. This is going to result in long-term growth. Don't obsess over the next 6 months. But of course, the stock market's looking beyond 6 months in many occasions. Doesn't see what we're talking about. What do you see?
The notion of short-term pain for long-term gain is certainly a legitimate idea. But I think the problem is we don't know what that long-term gain looks like right now. Because first of all, there's just the straight up ambiguity of like how much our company is going to have to reshore supply chains and how good will that be and will that really be good for profitability or are these just going to be less efficient supply chains? But also when you think about, countries that undergo some sort of major economic restructuring, cut in some areas, but then you try to create incentives for investment in other areas. So in this case, what kind of investments are there going to be for domestic technology, domestic manufacturing, and so forth? We haven't really seen the positive vision. So we know the negative aspect. I think back to, China actually several years ago when they purposely pricked their own real estate bubble, and it caused several years of market pain. But it was accompanied by this very long-term sort of deep strategy of like, okay, we want to race ahead in AI, we want to race ahead in chips, we want to race ahead in biotech, et cetera. So there was the positive vision that sort of went along with like the short-term pain. Right now, we're getting the short-term pain, but we don't really know what that sort of like positive vision or those engines of growth are going to be once we've reoriented the economy. economy.
There's going to be a little more conversation about short-term pain coming from the president, Donald Trump, and the Taoiseach, the Irish Prime Minister, just wrapping up their meeting in the Oval Office. So we'll get our hands on that conversation for you in a moment. You breaking out the telly tonight?
I'm not breaking out the telly, so we're doing, as you alluded to, we're doing a live taping of our podcast. There are still some balcony tickets. We've sold out the floor.
Look at you.
At the Miracle
Standing
Theater
room.
here in Washington, D.C.
Southeast.
So everyone should come to that. There are still some tickets available.
Yeah.
Speaking of mergers, we have the new FTC chief, Andrew Ferguson.
Excellent.
So we're going to talk about the new merger guidelines. We're going to have, speaking of tech and AI, Blair Levin, he used to be at the FCC under Clinton, and then on Wall Street, we're going to relive war stories from the telecom bubble, which was, I think, the last time investors were enthralled to this AI, sort of a tech infrastructure build out.
Yeah.
Are there some parallels to AI? And then we're going to have a debate on the Jones Act, which should be really fun. It's the law that restricts domestic shipping to U.S.-built carriers. We have someone from the pro side, someone from the anti side. That should be fun. I'm going to play a few songs on the acoustic guitar.
Okay.
So I had a cough. I'm a little worried about that. So
You sound great to me, man. Are you kidding? So 7 o'clock doors.
7 o'clock doors.
This is the
Get your
Miracle
tickets.
Theater
They're
in
still
Southeast
available.
Washington.
Just
For
get 'em
people,
right. There's nothing better to do in Washington tonight than this.
I can attest to that. For people not in the Capitol tonight, they'll hear the podcast when.
Yeah, the episodes. So we're going to get a few episodes out of the live taping.
Okay, super.
And they'll be out on all the feeds, Apple, Spotify, elsewhere, Odd Lots, wherever you get your podcast next week.
This is the best. You got to do this more often.
I know. I love coming down.
It's great to see you.
Thank
Congratulations.
you so much for having me, Jim.
Absolutely. On all your success.
Anytime.
If you're not subscribed to the Odd Lots podcast, you're the only one. You can find it
That's
on
right.
Apple or Spotify, and your life will improve. All right, so we're going to, like I mentioned, hear from Donald Trump momentarily. Why don't we set the baseline now that we've spent some time with the stalwart? How about the great Joe Weisenthal? Thank you again, Joe. Let's check in with Charlie Pellet at World Headquarters in New York on this CPI day. Hey, Charlie.
Well, hello there, Joe Matthew. Right now we have got the Dow lower, little change right now, down just 6 points. Dow Industrials down less than 0.1%. Let's call that flat on the day. But the S&P 500 index now up by 0.8%. The S&P up 42, 56.14 where we stand. And the NASDAQ Composite Index now surging by 259 points. For NASDAQ, that is a gain right now of 1.5%. 10-year at 4.32%. The 2-year currently yielding 3.98%. We've got bond yields climbing as concern about an escalating trade war overshadowed data this morning showing a cool down in inflation. 10-year 4.32%. The 2-year 3.98%. Gold up $19 the ounce, up 0.6%. And West Texas Intermediate crude oil up 2.2%, $67.69 a barrel. Oil is gaining as the U.S. cut its forecast for global oversupply and as slower than expected inflation supports riskier assets. Right now, oil shares for the most part higher. ExxonMobil up 0.2%. ADRs of BP up by 1.1%. And Chevron shares, they are falling by just about 0.3%. And this morning, the Energy Information Administration slashed its production for a surplus for this year. It also halved its outlook for a glut in 2026. Economic data this morning. Consumer prices rose at the slowest pace in 4 months in February, offering some reprieve. After months of stalling inflation progress, the Bureau of Labor Statistics said the CPI increased 0.2% after a sharp 0.5% advance in January. The average 30-year mortgage rate declined for a 6-week to the lowest level since early December, sparking a pickup in purchase and refinance activity. That according to the Mortgage Bankers Association, which now says the contract rate on a 30-year mortgage is at 6.67%. Sources tell Bloomberg President Trump will nominate Fed Governor Michelle Bowman to be the central bank's next vice chair for supervision as soon as today. The move fills a post vacated by Michael Barr. And the consumer robotics company iRobot is plunging right now after raising a substantial doubt about its ability to continue operating. The one-time Amazon takeover target says its board has begun a formal strategic review to evaluate options, including refinancing its debt, and is exploring that sale. iRobot, by the way, perhaps best known as the maker of the Roomba vacuum cleaner. iRobot shares plunging now by 30.4%. Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. The voice of Wall Street and the New York subway with us every day here on the fastest show in politics. It's great to see you. Thanks for coming along on the Wednesday edition of Balance of Power on Bloomberg Radio, on the satellite radio, Sirius XM 121, and YouTube. Find our live stream on YouTube right now by searching Bloomberg Business News Live. We'll bring you to the White House a little bit later on this hour. They're still going, I can confirm. The Taoiseach in town for what is usually a St. Patrick's Day party. Now, this is like a love fest. Then they go to Capitol Hill. They have some jokes. They do lunch. They come back for maybe a bilat at the White House. And all that is in the cards today. But the feeling's a little bit different with EU tariffs going into effect and retaliatory tariffs being announced overnight. They are talking about this. They're talking about Ukraine as well. And we'll bring you in the room for that conversation as soon as it concludes with the headline today. Putin likely to drag out Ukraine truce talks to seek terms. You might have heard the headline earlier that he was eventually set to agree to a truce. I'm still scratching my head on this a little bit, as Ukraine, the country that was invaded, surely would agree to a truce in that invasion. So yes, the ball is in Russia's court. Emily Domenech is an expert on this conversation, and I'm glad to say with us here in the studio as we wait to hear from the President and the Prime Minister. Senior Vice President, Boundary Stone Partners, and a veteran of Washington and the Speaker's office, Senior Policy Advisor to both Speakers of the House, Kevin McCarthy and Mike Johnson. Wonderful to see you. Thanks for coming in.
Yeah, thanks for having me.
You've got a background, of course, in the area that we're talking about here, and there are a lot of questions about whether this mineral deal will be signed imminently, as this apparently would unlock talks. But when you hear this kind of language from Vladimir Putin, can we take this seriously, this process?
I think we've heard Secretary Rubio say this over and over again, that we'll know whether or not Putin is serious based on what they're willing to agree to at the negotiating table. There's no way to find out whether or not they're serious about peace unless we have those conversations. I also think you've seen really incredible work from Secretary Rubio, from Mike Waltz, from the national security team in the White House to really sort of get these talks back on track following that disastrous White House meeting with Zelensky a few weeks ago. We've really seen them get people to the table. They've had serious meetings. They're having discussions about getting the mineral deal signed and moving forward. And we have Ukraine now talking about being willing to accept a ceasefire while they continue to negotiate. So I think we're seeing progress here. And again, we kind of won't know whether or not Putin is serious until they come to the table.
Sure. Progress after the setback in that meeting, as you described. Certainly. Are we back to where we were before that happened?
I believe so. And I think, again, that's really a testament to President Trump's team getting them back to the table and being serious here. But, you know, it would have been better to avoid that and sign the deal 2 weeks ago, because we'd be 2 weeks closer to a peace deal that Ukraine desperately needs.
Yeah. Well, so let's talk about off-ramps here for a minute. You would think that it would be a foregone conclusion that Ukraine would want a ceasefire or a truce. Maybe I shouldn't assume that. I also would assume that Russia might as well, considering the loss financially, the human toll following 3 years of war. Isn't everyone looking for an off-ramp?
One would certainly hope. I think that's what you've heard from President Trump over and over again, is the loss of life, the catastrophic damage to this country, the catastrophic damage to other parts of Europe as their economies struggle because of this war. I think he's very in tune to the damage that's come of this 3-year conflict and wants to end it as quickly as possible. I think the challenge here is there have to be some, Putin wants to save face with his supporters. Ukraine wants to save territory. And I truly believe that the mineral deal, frankly, is one of the best ways to resolve this conflict, because it makes the United States an economic partner of Ukraine and the Ukrainian people in a way that we haven't seen in other peace deals. So I think that puts the United States with a direct interest in the prosperity of that country in a way that, frankly, one-off aid packages don't do.
Now, I'm supposed to ask you about security guarantees, right, at this point of the conversation, and our audience should know that you actually serve in the Navy. You're a warrior. You've worked at the Pentagon. That might color your perception of this whole idea, but this is a White House that seems very reluctant to offer at least military security guarantees. They say this investment is the equivalent of that. Do you believe that?
I really do. And I would say, I think we often find ourselves, where we're providing military services either in the form of weapons or weapons aid or in, training exercises and things along those lines. But the economic partnership that could come here, again, provides the United States with a real interest in the prosperity of Ukraine in a way that we never would if we were just simply providing military aid, again, in these sort of one-off packages that we've seen go through Congress.
Yeah.
You always are left with, well, what comes next? What happens when this money runs out?
right.
What happens when this funding runs out? Instead, we'd have this long-term partnership where we're looking to develop these really, really critical minerals for high-tech materials, for nuclear power, for all the kinds of things we need to be able to see a more prosperous global community.
Yeah, sure.
So I think, frankly, like, again, that economic partnership model is a really unique way to think about foreign aid, and I think it serves us well going forward.
What kind of military aid should Ukraine count on in a world where there is, in fact, a deal that is signed here? We've talked a lot about this, certainly in the Biden years, where so many Republican members said not another dollar. There is still some unspent money, but there are also questions about the programs we invested in. Should we have sent M1 Abrams tanks and F-16s when we might have been better off sending long-range missiles and interceptors? How do you see that?
I think we want to be able to see us develop long-term partnerships with the countries that we support. That means that we shouldn't be doing knee-jerk policymaking, even when it comes to providing aid on the military side. Developing the ability for Ukraine and, frankly, the rest of Europe to make more investments in their own security is something that the United States can support by being a good trading partner. So I think we'll see more stuff in the economic space and perhaps less on the military side, where we can have those shared goals and interests.
Yeah. Do tariffs impact procurement of military equipment? You talk about all of the things that we need, from chips to metals to rare earths, that are actually part of our military hardware. This is something that defense contractors are going to have to face, aren't they?
Absolutely. And I think, again, this is part of where those trade negotiations become so important. I think about the discussions with Canada, for example, which is they provide many of our critical minerals and have some of that materials processing capability that we don't have in the United States. But I also think it comes back to, what's your domestic policy? How do you reshore some of these industries that we've allowed to be really outsourced to a place where perhaps our national security is threatened? I think you saw that with the investments in, through the CHIPS Act and other places where we're trying to work to bring these partners back home. The problem here, though, is that oftentimes when we make investments in the United States, we don't stop folks from continuing to produce those same materials in China, and that means we're not spending our money in a smart way. So I think what you'll see from President Trump is an effort to say, hey, look, we want you to come do business here in the United States. We're going to try to provide a tax code and a regulatory environment that makes that the best place to do business. You're the best place to do business. But if you're going to do business in the United States, we don't want to see you continue to do business in China.
Yeah, well, that's right. And that does seem to be a bipartisan angle here in Washington right now. I want to ask you, speaking of bipartisan, we didn't see a lot of bipartisanship on Capitol Hill yesterday when the stopgap to prevent a government shutdown came to the House floor. And that's not a big surprise. Maybe it was a surprise that a single Democrat voted for it, actually. But there's a real concern about CRs, as we call them, continuing resolutions that basically extend the baseline, kick the can. I think we saw a $6 billion increase in Pentagon spending that was added at the last minute here. But Pentagon hawks, defense hawks, are outraged about this budgeting by CR year upon year, because it acts as a budget cut. Can you explain that?
Yeah, so if you don't adjust for inflation, then you're essentially
Is it as simple
having
as inflation?
That's certainly part of it, but it also means you can't manage the Pentagon in an effective way. You can't end programs that should be ended, and you can't start new ones that need to be begun. Frankly, I think it's a kind of thing that can make it more difficult to identify fraud, waste, and abuse across the Pentagon complex, and to provide the cost savings that we need in order to pay for the new weapon systems that we need into the future. So it is a clumsy way to do business, to operate under CRs. Unfortunately, we live in an environment where getting the appropriations work done in a timely manner has been a real challenge. I think, in this case, the CR was the best option to make sure we can get on to doing the tax reform work that's really necessary under reconciliation and sort of clear the decks here. But it would have been better to work through this last year and get to a place where we had good appropriations going through the year. And I'm hopeful that we'll see that sort of return to regular order in the summer when we get through the reconciliation process. I fully expect that from Tom Cole, who runs the Appropriations Committee on the House side, and I think their Senate counterparts will want to move just as well.
Well, I'd love to hear a little bit more about what that would look like. Give us a peek. Imagine a world in which there's regular order, there's a defense authorization, and an actual military budget that's debated in a committee and passed. This is revolutionary. I know what I'm talking about here. But what would it mean for for weapon systems, for the investments that we're making, as we keep hearing that we're preparing for the wrong war, that we need to be buying more drones, unmanned vehicles, not more aircraft carriers. What do you think?
So I'll push back a little bit on the more aircraft carriers, because I do think that shipbuilding is a critical part of certainly our power projection.
The ultimate projection of power that
Absolutely.
America has.
That's a
How
job
about
of the
what
Navy.
goes on those aircraft carriers?
I think this is a great example of where you need to be able to have that flexibility to start new programs and make investments in the kind of innovative work that we've seen the Pentagon do over and over again. Frankly, they've gotten really good at operating in a CR. They still do it. We still pass that defense authorization bill every year.
Yep.
It's the only bill that we've
done.
We've done every single year. It gets closer every time. And we often get defense appropriations done even when we're operating in a CR, because it's something that, as you said, those sort of Republican defense hawks really insist on. But I think in this case, one of the things we need to do to make sure we're better providing for the warfighter is actually go through and get the Pentagon to a place where it can pass an audit and we can tell where all of our money is going. Because right now, it's an agency that has never passed an audit. We do not know where our dollars are going in the most important part of the federal government. So I think that's a huge task for Secretary Hegseth and something they're trying to prioritize here, because everyone, like myself, I worked in the Pentagon as a civilian. Everyone who worked there as a civilian or in the military knows there is a catastrophic amount of waste there that prevents us from giving the warfighter what they need to succeed, both in today's war and tomorrow's
in your wildest dreams, can you imagine what a Pentagon audit would show?
Oh, I mean, massive amounts of waste, certainly. And again, everybody has a personal experience with it. If they've served in the military, we all roll our eyes about systems that are slow, that force you to buy plane tickets that cost more money than they should, or stay somewhere that's more expensive, because it is truly a giant bureaucracy. And again, I think, we've seen a lot from Secretary Hegseth about wanting to change the culture at the Pentagon. It's my hope that this focus on fiscal responsibility and being able to actually say we're spending our money in the best way possible to man, train, and equip our warfighter. I hope that we're able to answer those questions at the end of this term.
As we spend time with Emily Domenech, Boundary Stone Partners, give me a sense of the culture in the Pentagon right now with massive layoffs at hand, a massive culture shift just in the approach of management and style with Secretary Hegseth. What's it like when you walk in the halls?
I mean, I would say in the force, I can't speak for the Pentagon because I'm not there on a daily basis, but I would say what you hear often is a sort of refocus on readiness. And what does readiness mean? It doesn't mean getting all of your paperwork done for your cybersecurity training or your annual training that you're checking a box on. It means making sure that we're physically fit. It means making sure that we're capable and staffing. And in my case, I'm in the reserves, being able to provide quantifiable skills to the active duty as they look to fight our future wars. I think it's a more of an investment in military culture and saying that we need to be able to be honest about where we fall short and where we need to do better. And we've seen the retention numbers, frankly, to back that up. We're seeing recruitment numbers go up because Secretary Hegseth's persona is, frankly, bringing a new sense of pride in service that I think is something that has been neglected in the past.
I mean, that's interesting because this is a very controversial pick, of course.
Absolutely.
A lot of his moves have been controversial. His prior statements, lifestyle, everything has been part of this. There's been concern about DEI and so forth, maybe some people not being treated fairly, but you see optimism.
Certainly amongst the folks who are who are serving in the military, yes. I'd also say, I think you mentioned DEI as sort of one of these examples of wasteful things we see in the Pentagon. Another thing is straying away from the core missions of the Pentagon. Again, as I said, the role of the Department of Defense is to man, train, and equip our warfighters. We want to prepare them for the future war and ensure they have the weapons and technology they need to fight that effectively. We've gotten distracted, frankly, with thinking about the diversity of the force, thinking about fighting climate change, thinking about the kinds of policies that are outside of that scope. It doesn't mean you can't care about diversity. It doesn't mean you can't have agencies in the federal government that care about energy and being innovative in that space, but it's not the job of the Pentagon. And I think that's what we've seen from Secretary Hegseth is let's refocus on that core mission set.
Well, there's so much more I want to talk to you about because diversity has been an asset. I think we can agree the military has been ahead of the rest of society for a long time on this. And the hardening of military installations when it comes to climate is something that we've talked about a lot here as well. So I want you to come back. I hope that you can.
I'd love to.
We could do a documentary with Emily Domenech. What a great conversation. Thank you so much for being with us. Senior VP, Boundary Stone Partners. I'm Joe Matthew in Washington. Glad you're with us here on Balance of Power. They've wrapped the meeting in the Oval. We're going to bring you in the room for this conversation ahead between President Trump and the Taoiseach, the Irish Prime Minister, in town today. Let's get a check on Wall Street first, though. Charlie Pellet has his hands on the markets at World Headquarters in New York. Charlie?
I thank you very much. And we have got the Dow, the S&P, NASDAQ all higher right now in the green on the Dow, overcoming earlier losses. Right now, the Dow Industrial is up 19. That is an advance of just about 0.1%. S&P higher now by 48, up by about 0.9%, while the NASDAQ Composite Index up now by 290 points on NASDAQ, up by about 1.7%. Stocks rising after a two-day sell-off led by tech mega caps following this morning's cooler than forecast February inflation report. We've got the 10-year right now at 4.31%, the 2-year 3.98%. Spot gold up by about $19 the ounce, up 0.7%. West Texas Intermediate crude up 2.3%, 67.77 a barrel, and Bitcoin right now down 0.7%, 82,162 on Bitcoin. Mortgage rates dropped for a 6-week, sparking a pickup in home sales and loan refinancing. And with more on the story, here's Bloomberg's Vinny Del Giudice.
The contract rate on a 30-year home mortgage dropped to 6.67%, this year's lowest. Mortgage rates track U.S. Treasury yields, which have dropped sharply of late. Investors are flocking to the safety of government securities amid worries about President Trump's policies. The data are published by the Mortgage Bankers Association. Vinny Del Giudice, Bloomberg Radio.
Among home builders, Toll Brothers now down by 0.2%. KB Home is down 2.1%. Lennar trading lower by 1.7%. The Dow back in the red, recapping right now. The Dow Jones Industrial Average turning negative, been that kind of a day. Choppy trading with Dow now down 25, down 0.1%. S&P holding on to a gain of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie, thank you so much. In New York, Charlie Pellet watching Wall Street for us as we cover politics in Washington. The president walking the Taoiseach out. It couldn't have gone that badly, right? If you're with us on YouTube, there's a live view of the West Wing entrance as they wrapped a roughly 45, did we go 45, James? 50-minute romp in the Oval Office with reporters, of course, in what is a very important meeting today, the first European leader to arrive in the Oval Office since President Zelensky left. And it is happening just within hours of tariffs taking effect against the EU, retaliatory tariffs being announced as well. So we're going to bring you into that conversation as soon as it's ready. The Taoiseach is now leaving. They go to Capitol Hill. They've got to do the lunch, and we bring in our political panel. In the meantime, Rick Davis is here, Bloomberg Politics contributor, our Republican strategist and partner at Stone Court Capital, alongside Adam Hodge, managing director of Bully Pulpit International. Adam's on TV more than I am here at Bloomberg, and it's great to see both of you guys. Rick, I'm curious what the body language is going to be and whether Donald Trump was determined to not repeat the episode with President Zelensky. How important is decorum on a day like this when the Taoiseach is in town to essentially celebrate St. Patrick's Day?
Yeah, I mean, typically this is less substance, more, I wouldn't call it pomp and circumstances, maybe pomp and suds. I mean, a little green beer never hurt anybody. And I think this is a good tradition. It's something that I think adds stability to an otherwise turbulent world, to show old friends, Ireland and the U.S. celebrating an important occasion with the Taoiseach in tow, headed to the Capitol. It's going to be a lot of fun today. And I think that's right. I mean, I'm glad that the administration didn't turn it into a, hostile negotiating session where people are dragged into the Oval Office and there's a shouting match. I mean, like we've seen enough of that for the month. So I'm really hyped up that we've got a good ceremonial event today. And I'm sure we won't be lacking headlines later, but at least right now it seems to be going along tradition.
President said he does not want to do anything to hurt Ireland. Adam, he wants fairness. This after he slapped a 25% tariff on steel and aluminum. As expected, Europe this morning putting $25 billion of retaliatory tariffs in place. What do you think he wants to accomplish in this meeting?
I mean, I think Rick's right. I mean, a little bit of this is just trying to keep up
with appearances and keeping up with the good spirits with Ireland, and they'll go to the Hill and have a nice lunch. I think there's no question, Ireland has often been an envy of President Trump, particularly for their low corporate tax rate. And so I'm sure he touched on that bit, and he's trumpeted that in the past. On the tariffs, I think what it was interesting that you see more about the list that the EU put out, right? I mean, some of it is clearly outlined to put some pressure on the Hill, to get Republican members to squeal to the White House about why they don't want these tariffs to go into place. But I thought it was interesting the way the EU decided to sequence those tariffs, right? I mean, it leaves room for negotiation. It leaves room for them to try to strike a deal to avert these tariffs going forward. And so, like, it remains to be seen whether that comes about. But it overall does lead to a bit more of this uncertainty as to whether tariffs will go into place, what level, how often they will be. And that uncertainty is certainly hard for corporates and companies on both sides of the Atlantic.
Yep, to Adam's point, the European Commission says it will, from April 1st, reimpose tariffs in response to $8 billion in U.S. tariffs. This is the Harley-Davidsons, the jeans, and so forth, bourbon, Kentucky bourbon. From mid-April, it will set further countermeasures over 18 billion euros here. Rick, and I apologize in advance, I think we're about to get this tape out of the White House here. If we need to cut you off, I apologize, but does Europe buy enough American product for this to actually make a dent?
Look, I think it's a cumulative thing, right? So, it's a little bit here on these products. If the trade wars continue to expand, it could cover other merchandise, frankly, that is probably sold in a higher percentage rate in Europe than these things. And I would say, too, that's before we even get to the reciprocal tariffs, which will include commodities that the U.S. sells into Europe in a pretty significant way. So I think everybody in Europe is taking this probably harder than we are, in the sense that our economy is so big that we can absorb these kinds of tariff exercises better than some individual countries like Ireland in Europe. And so it's definitely, I'm sure, going to worry decision makers and officials in Europe significantly, because we are an important trading partner for them.
Yeah, you do wonder about some of these choices. Makes good headlines, Adam. Harley-Davidson motorcycles, right? Kentucky bourbon and blue jeans. But, Donald Trump is talking about, in the case of other tariffs, much larger industries. When you're talking about autos and so forth, is the blue jean industry going to survive this?
I think Levi's will end up being all right. I think bigger thing that you have here, Joe, right? I mean, like these tariffs that we're talking about, not just in steel and aluminum, but the Canada and Mexico tariffs at 25%, that's much, much bigger than anything that happened in the first Trump administration. And so the rub that I think is important to keep in mind here is very few of these tariffs actually address the bigger strategic problem we have with overcapacity from China and other countries in the world, right? The U.S. and the EU tried to get a deal during the Biden administration to deal with China's overcapacity in steel and aluminum and try to encourage the production of cleaner, greener steel. That's obviously out the window. That's not happening anytime soon. And so the uncertainty and the higher prices that you may see companies have to try to absorb going forward is a real risk and to the bottom line of these businesses. And that's why you've heard more and more companies start to speak out about what their concerns are. It's the uncertainty. It's the inability to know what's actually going to happen when, and do I need to buy and front load some of these pieces now, or do I wait? And that really, I think, is what will continue to weigh on markets going forward.
Well, with uncertainty in the air, we're going to bring you into the Oval Office right now. Many thanks to Rick Davis, Adam Hodge, for walking us into this. The Irish Taoiseach, Prime Minister Martin, alongside President Trump. Let's listen together on Bloomberg.
Government, you've done some extraordinary things very quickly.
Thank you.
Everybody's watching in that respect. So,
thank you.
Delighted to be here. It's an honor to be here.
Well, it's a great honor to have you, and special people, very special people. I know a lot of Irish, and growing up in New York, I know a couple of your people that used to live in that beautiful Ireland, and now they're here, but they love your country very much. You know, they have a great feeling toward your country.
They have, and a lot come back for holidays and
they come back.
stuff like that, and checking out their family, ancestry, and things like that. You know.
Great, fantastic people.
Some go to Doonbeg as well. Yeah.
And they go. We love Doonbeg. I love them. I don't know if I'll ever see it again. Maybe I won't, but I think I will. We'll get there. We're going to get there. It's a beautiful place, wonderful place. Any questions, please?
Mr. President, on tariffs, how far
yeah, please.
President Trump, how worried are you about the counter tariffs from the EU, which were announced yesterday? And also, how worried should Ireland be, given the fact that it has a massive trade surplus with the US, over $50 billion? Neil Martin might be quite nervous about what you're going to tell him today.
Well, I don't think he looks nervous to me. And if he was nervous, he wouldn't show it. Now, we do have a massive deficit with Ireland, because Ireland was very smart. They took our pharmaceutical companies away from presidents that didn't know what they were doing. And, you know, it's too bad that happened. It's a tremendous job. I give, look, the Irish are smart. You're smart people. And you took our pharmaceutical companies and other companies, but, you know, through taxation and proper taxation, they made it very, very good for companies to move over there. And we had presidents and people that were involved in this that had no idea what they were doing, and they lost big segments of our economy. The European Union treats us very badly. They have for years. I saw that. I had it out with them in my first term. It did well, but we had to solve other problems, and we did. But European Union's been very tough, and it's our turn too. You know, we get a turn at that also, but they have not been fair. They sue our companies and win massive amounts of money. They sued Apple, won $17 billion, and they use that for other reasons, I guess, or to run the European Union. So I'm not knocking it. They're doing what they should be doing, perhaps, for the European Union, but it does create ill will. And as you know, we're going to be doing reciprocal tariffs. So whatever they charge us, we're charging them. Nobody can complain about that. Whatever it is, it doesn't even matter what it is. If they charge us 25 or 20% or 10% or 2% or 200%, then that's what we're charging them. And so I don't know why people get upset about that, because there's nothing more fair than that. And we had a problem with Ontario, and they dropped that when I let them know what we were going to be doing. They dropped it immediately, so I'm glad, because electricity, you shouldn't be playing with electricity. It affects people's lives. Actually their life. I mean, it can affect, depending on weather, it can affect their life. So we can't do that. And it doesn't make sense that our country allows electricity to be made in another country and sold into us. Who did that deal for the United States? Okay, I looked at that long ago, and I said that's not something that's very smart. So we've had a lot of bad trade policies, and yet we're doing very well right now. But we're doing well because I won the election. If I didn't win the election, you would have had a very bad period. I think a lot of the stock market going down was because of a really bad 4 years that we had. When you look at inflation and all of the other problems wars and inflation and so many other problems. But we're going to have very good years. We had, I don't know if you saw a little thing like the cost of eggs, little to you, but big to people out there, down almost 30% in the last few days. We got it down. We did a lot of things. We have a great Secretary of Agriculture, and we did a lot of things that got the cost of eggs down very substantially. And so many other things. A very big thing that I'm very happy with is oil is down to $65 a barrel. And that's faster than I would have attempted. We put on the gas, we stepped in the gas in order to get oil. And what's happening. So we're getting that down. And when energy comes down, prices are going to be coming down with it. So in a very short period of time, we've done a very good job. And I think that the tariffs that we're talking about, and again, reciprocal. I think that the tariffs, there are some cases where they're a little beyond reciprocal because, you know, we've been abused for a long time as a country. We have been abused really for a long time, and we will be abused no longer. Okay.
Are you going to retaliate to the EU?
Education, sir, would you just describe for us is this meeting your vision by cutting about half the workforce, and what responsibility do you feel to the civil servants who have now lost their jobs? Many of them worked at the Department of Education during your first term.
Sure, I do. I feel very badly, and but many of them don't work at all. Many of them never showed up to work. Many of them never showed up to work, Kelly, and unfortunately, and that's not good. And when we cut, you know, we go, and that's what I had a number of meetings with a lot of people over the last couple of months. When we cut, we want to cut, but we want to cut the people that aren't working or not doing a good job. We're keeping the best people, and Linda McMahon is a real professional, actually a very sophisticated business person, and she cut a large number, but she kept the best people. And we'll see how it all works out. But our country was run very badly. I mean, whether it was that or contracts that were signed that was so bad, so obviously bad, and I go through them in speeches. I could go through them all day long. I could read for billions and hundreds of billions of dollars, and all of that fat and waste and fraud and abuse is being taken out. But it's incredible what's happened. Now, Department of Education's maybe more so than any other place has a lot of people that can be cut. They're, number one, not showing up to work. Number two, they're not doing a good job. And if you take a look at our education process, and if you look at the charts, because they have numerous charts where they do the top 40, we're at number 37, 38, 39, and 40. And recently they hit, during Biden's last few days, they hit last. So they were number 40, and yet we're number 1 in cost per pupil. So it's pretty bad. But we have a dream, and you know what the dream is? We're going to move the Department of Education. We're going to move education into the states, so that the states, instead of bureaucrats working in Washington, so that the states can run education. And you have Norway, you have Denmark, you have Sweden, you have Finland, you have various countries that do very well. You also have China that does very well in education, which is a pretty big tribute to China, I must say. 1.4 billion, and they're in the top 10, and it's pretty amazing. So we can't blame size anymore. You know, normally you'd blame size. It's too big, how can you do it? But China does it. So we think when you move it back to Iowa and Indiana and all the states that run so well, there's so many, I could name 30, maybe almost 40. Those will be as good as Denmark, those will be as good as Norway, and they'll be as good as any of these. I believe they'll be as good as any. Now, then you're going to have 10 that won't be so great. You're going to have 5 that will not be good at all, but we'll work with them and we'll get them to be good. But what we want to do is always school choice, but we're going to do school choice, and we're doing it. But we want education to be moved back where the states run education, where the parents of the children will be running education, where governors that are doing a very good job will be running education, not run. I drive through the city and I see like so many buildings, Department of Education, Department of big buildings, and by the way, they're empty. Nobody shows up to work. So I think Linda did a very good job.
Mr. President, do you have a meeting with Vladimir Putin scheduled or a conversation? What would be your message
I
to him?
won't comment on that, but we had a great success yesterday. We have a full ceasefire if it kicks in. We have to see. It's up to Russia now. But we've had a good relationship with both parties, actually, and we'll see. We'll be knowing people are going to Russia right now as we speak, and hopefully we can get a ceasefire from Russia. And if we do, I think that would be 80% of the way to getting this horrible bloodbath finished. It's a bloodbath is taking place over there. On average, 2,000 to 3,000 young people a week are being killed in that stupid war that would have never happened if I were president. So we have people going over there, Mr. VP. Do you have anything to say about it? Because you're very much involved. What's going to happen?
Well, we've got some conversations that are happening on the phone and in person with some of our representatives over the next couple of days. As the president said, we think that we're in a very good place where the Ukrainians have agreed to a ceasefire, and we're now going to see whether we can get the Russians to agree to a ceasefire too, and we'll certainly have news on that when we find out that news.
Are you confident that Vladimir Putin will keep the ceasefire, considering that he's broken them in the past?
We haven't spoken to him yet with substance, because we just found out, and we just were able to get Ukraine to agree. So we're going to know very soon. I've gotten some positive messages, but a positive message means nothing. This is a very serious situation. This is a situation that could lead to World War III. And Biden should have never let it happen. Incompetence allowed this to happen. This shouldn't have happened. October 7th in the Middle East should have never happened with Israel. The horrible leaving, the way they left Afghanistan should have never happened. Inflation should have never happened. You know, we have great inflation numbers, by the way, just got released. Inflation is way down, and it's based on what we've done, and we've done it in a very short period of time. You know, we had virtually no inflation. For 4 years, we had almost no inflation, and when these characters took over, we went from no inflation to the worst inflation probably in the history of our country. So it's very interesting. Go ahead.
Are you going to retaliate against me?
And by the way, I have to speak of inflation. I love these socks. What's with these socks?
It's in honor of the T-shirts.
I'm trying to stay focused, but I'm very impressed with the VP's socks.
That the United States is recognized as having such an important role in the peace process, and yet half the parties from the Northern Ireland government have decided not to come to the St. Patrick's Day celebrations.
They haven't, what?
They haven't come over, they're boycotting the St. Patrick's Day celebrations.
What are they boycotting?
They are talking about your position on Gaza as one of the reasons why they...
Oh, I haven't heard that. I really haven't heard that. Look,
Can I just say, I got to pay tribute to the President on the peace initiatives. The one thing we've learned in Ireland about the peace process that you've just spoken about, and I recall back in the early 90s, when the first tentative steps to get peace in Ireland, people criticised people like John Hume or people like Albert Reynolds, and then Taoiseach. But they kept going. And when we got that ceasefire in 93, okay, it took a number of years to get the comprehensive peace settlement. But again, the guns more or less largely went silent. The war in Ukraine is a devastating war on young people. And I think that very simple, straightforward narrative is to be commended. We all have children. We're shocked at the prospect of young people losing their lives in that number, be they Ukrainian, be they Russian, whatever. Anything we can do to stop the violence, I think, is an extremely positive day. And there will be all sorts of people having qualifications on it and all the rest of it. It's our job then to work on it and to try and build it. Europe, US, and everything.
I will say, and thank you for that, but I will say, last week, 2,500 young people died while we sit here and talk.
Yeah.
And while they talk about peace, but they've been talking about peace. This should have never happened. This war should have never happened. It would have never happened if I was president. That's what makes me more angry than anything else, because you've had far more people die than they report, than these people report, for whatever reason. But you had far more people. The numbers are far more devastating. You'll find that out someday. And it doesn't affect you very much. They're not Irish, and they're not from my country. They're from Russia mostly, almost all from Russia and from Ukraine. And people could say, why are you doing this? Why are you involved in that? Because 2,000 people a week are dying. And they have families, and they have mothers, and they have fathers, and they have sisters, and they have brothers and friends. And they're dying. And I've seen the pictures, the satellite pictures that we see all the time. And it looks like Gettysburg in its prime, because that was, they say, one of the most horrific battles ever. You have kids lying all over these fields that are dead because the weapons today are unbelievable, between drones and various types of guns. I'm not even talking about beyond that with the big babies. You understand what I mean? I hate to even mention the name, the nuclear name. I hate to mention it. But you have weapons today that are so powerful. And I see kids every week. I see pictures of kids laying all over the field dead. They're dead. Beautiful kids. They're dead. And they're not from here, and they're not from where you are, but he's working very hard. We're all working hard to get this thing finished. It's crazy over nothing, and it's not going to go anywhere. It's just a terrible situation. And I think we have a chance to get it done. So we've gotten half of it as a ceasefire, and if we can get Russia to stop, then we have a full ceasefire. And I think it'll never go back to war. I think something.
Can I ask you about Ireland's relationship with Israel? There's been a lot of talk recently. The government are looking to bring in what's called the Occupied Territories Bill, which would ban goods from occupied territories. I know you met with Prime Minister Netanyahu recently. Did Ireland come up in that conversation? Did he raise any concerns about the large number of
One thing I'll tell you, you're not from Israel, that's for sure, huh? She's definitely not from Israel. It's an interesting question coming from you. We talk about everything. Israel has been under siege, as you can see, and they had to fight back. October 7th was a terrible thing. People don't like to mention it, but it was a terrible, terrible day in the life of the world. And it's amazing the way people don't mention that, but it was, I've never seen anything like it. Those are other clips I get to see. You know, as president, you get to see clips that you'd rather not see, but I see clips, and that was a terrible day for the world. And we're working hard with Israel. We're working hard to see if we can solve the problem. I will say I just saw 10 hostages, and they were treated really badly. They were really treated badly. I was shocked. I asked them, was there any kindness shown? They were in there. One was in there for 500 days. One was 323 days. I said, was there any, 10 of them, I said, was there any kindness displayed? Like, did they ever, like, say, don't worry, you'll be okay? Or give you a little wink, or give you, like, an extra slice of bread or something? And everybody said, all of these people said, zero. It was hatred. It was pure hatred. So, I mean, that's a very deep-seated problem.
Could you give the Taoiseach some advice? Ireland is in the midst of a housing crisis now, and I know you have a lot of experience as a businessman. How can the state build tens of thousands of houses at speed?
You know why they have a housing crisis? Because they're doing so well. They can't produce houses fast enough. That's a good problem, not a bad problem. That's a pretty good answer, President. Congratulations. No, it's true.
Will you put more tariffs on the EU, Mr. President? Mr. President, will you?
Everybody should have that problem. That's okay.
Will you put more tariffs on the EU?
I know this gentleman. He'll get it solved.
Will you put more tariffs on the EU? Will you respond to their retaliation?
Oh, of course I'm going to respond.
You will retaliate.
The problem is our country didn't respond. Look, the EU was set up in order to take advantage of the United States.
Including Ireland? Is Ireland taking advantage of the US?
Of course they are. I can't, you know, I have great respect for Ireland and what they did. And they should have done just what they did. But the United States shouldn't have let it happen. We had stupid leaders. We had leaders that didn't have a clue. Or let's say they weren't business people, but they didn't have a clue what was happening. And all of a sudden, Ireland has, you know, our pharmaceutical companies and other, this beautiful island of 5 million people has got the entire U.S. pharmaceutical industry in its grasp. And, you know, you mentioned housing and you mentioned other things. I mean, I have property in Ireland, as you know, and I love it. It does great. But I'd like to see the United States not have been so stupid for so many years, not just with Ireland, with everybody. You know, I looked at trade deals. I was telling the group yesterday, I looked at trade deals in term one. It's one of the reasons I decided I had to do this, because somebody had to straighten it out, and I didn't see anybody that was going to. I looked at trade deals that were so bad, I'd actually say, how is it possible that this could have happened? Who would have been so stupid to let these deals happen? For instance, when the pharmaceutical companies started to go to Ireland, I would have said, that's okay if you want to go to Ireland. I think it's great. But if you want to sell anything into the United States, I'm going to put a 200% tariff on you. So you're never going to be able to sell anything into the United States. You know what they would have done? They would have stayed here.
So do you planning to lower corporate taxes to match?
He's so lucky that I wasn't.
Are you planning to lower corporate taxes to match Ireland?
Well, we are planning to lower taxes, yeah, if the Democrats behave, but the Democrats have no clue. You saw that the other night during the speech. 2 young women were slaughtered by illegal aliens. 1 young man has very serious cancer and many other problems. We look at the people up there. They all had difficulty, very serious difficulty. But when we're talking about 2 young girls, beautiful young girls, Lake and Riley, you know the whole story. That evening was a disaster for the Democrats, in my opinion. And I would mention, and I'd see two mothers that were inconsolable as they stood, crying. Their daughters have been absolutely just destroyed, killed, viciously killed. And the young man who loves the police departments, he had cancer and has cancer, very bad cancer. There wasn't from people sitting there, Democrats, there wasn't a hand clap. Nobody stood. They were just stone-faced. These people are sick. There's something wrong with them. There was no standing for anybody. The only thing they liked is when they heard about the death taking place with Ukraine. They were happy about that. They were happy about that. Pocahontas was very happy. She's the one that was slapped. That's why I looked at her. I said, oh, it's Pocahontas. These people are sick. They don't know what's happening in the real world. The Democrats have to get their act together. And if they don't vote, then what you're going to do is you're going to have taxes that are going to go through the roof. You're going to have a very bad time. You're going to have some very bad things happen. And people are going to blame the Democrats. And Schumer is a Palestinian, as far as I'm concerned. You know, he's become a Palestinian. He used to be Jewish. He's not Jewish anymore. He's a Palestinian. Okay.
On tariffs, there's been a lot of on and off, some inconsistency.
There's no inconsistency, only with NBC, which is one of the worst networks on television, by the way. Let me just tell you the inconsistency. I have the right to adjust. And I was called by the automakers as an example, General Motors, Ford, etc. The big three, the big four, and they asked me to do them a favor. Could I delay it for a period of 4 weeks so that they're not driven into a little bit of a disaster for them? They actually love what I'm doing, but they had a problem. And I'm not like a block that just, I won't delay. It's called flexibility. It's not called inconsistency. It's called flexibility. And I think you want me to be flexible too.
Is flexibility going to be your ongoing view towards?
Sure, I'll always have flexibility, but there will be very little flexibility once we start. April 2nd is going to be a very big day for the United States of America. The United States of America is going to take back a lot of what was stolen from it by other countries and by, frankly, incompetent U.S. leadership, grossly incompetent. I gave you an example of Ireland. I would have never let that happen. Impossible for that to have happened. But we're going to take back our wealth, and we're going to take back a lot of the companies that left are coming back. If you haven't read, we have the biggest computer chip company ever, has virtually all of the market. I didn't call them, they called me. And they called for two reasons. Number one, we had a great election of somebody that they want running the country. And we won in a big mandate. We won every swing state. We won by millions of votes. We won by 2,750 districts to 500. Think of that, 2,750 districts to 500. That's why the map, when you looked at it, was entirely red, meaning Republican. Not meaning communist. So anyway, look, this country needed somebody to defend it. It's this big, beautiful place that was being ripped off by illegal immigrants coming in from prisons, coming in from mental institutions, gang members, gang leaders, drug dealers, pouring into our country with the open borders. I am so angry at the last 4 years at what they've done to our country, what they've done to this country between inflation, but maybe the most that bothers me is that they would allow millions of people to come into our country that are stone cold murderers, killers, drug dealers, the worst gang members, the worst people allowed into our country. And we're now getting them out. We're going to get them out. We're getting them out. I want to thank Tom Homan, by the way. He's doing a great job. And I want to thank Christy Noem, who's doing a fantastic job. This is a job that's so unnecessary. This should have never happened. This should have never happened. So we're bringing back our country in many ways, not only financially, and financially we'll be stronger than ever before. I think the markets are going to soar when they see what's happening. I'll tell you what, I'm called every day by numerous big companies. I spoke at the Business Roundtable yesterday. They had the largest attendance they've ever had. And these are only the CEOs and chairmen, but mostly the people that run the boss, the people that run the top 150 companies. 150 people showed up. Every single company showed up. First time it ever happened. It's been around a long time. The biggest business leaders. We had a great discussion. Went really well. And I want to tell you, there's tremendous optimism out there about our country in terms of regulations being cut, in terms of taxes being cut. And it would be great if the Democrats would do what's right. It would be great if the Democrats would do what's right for our country for a change, because they really are there. They've lost their way. They've lost their way. They think that people pouring into our country from prisons, jails, murders. We have 11,088 murderers that were allowed into, people that murdered people, half of which murdered more than one person in our country. We're getting them the hell out. But who would allow this to happen? Who would allow men to play in women's sports? And they're still fighting it. They're still, it's got to be a 95% issue. But they're on television this morning. I see this person, a Democrat, say, we should have the right. No, men should not be, they're hurting women. They're hurting women very badly. They're hurting women, and they should not, and they're also demeaning women. But who would want these things? And everything's transgender. Everybody transgender. That's all you hear about. Now, that's why we won the election in record numbers. But very importantly, now it is what it is. The Democrats should get with us and come up with good tax policy so that Ireland and other countries can't take our businesses away from us. And he understands exactly. You guys did the right thing. I'm not upset with you. I think I respect what you've done. You've done a great job. But our people did a very bad job.
How advanced are your plans to try and bring some of those companies back to America? Will you be briefing?
Well, I'd love to have him back. I mean, I'd love to have him back, but he'll be fighting me on it.
I mean, what I would say, President, if I could, 1 second, just make the point. It's a two-way street too, and we are investing a lot more in America now. And people may not realize, but Ryanair, one of our biggest airlines, for example, AirCap, they buy more. The two of them together buy more Boeing airplanes than anybody else outside of America. That's a little known fact. It doesn't turn up in the statistics, but Ryanair and AirCap, big aircraft leasing company, Irish company, have done great work with Boeing. Huge investments over the last couple of years, you know. So, and there's a lot of Irish companies here now, about 700 odd Irish companies based in America. Glanbia, Smurford, Waterrock, I was saying to you this morning, Vice President, a lot of them creating thousands of jobs in America. And it's only fair. I mean, that's correct.
That's right.
That's the way it should happen. And I think it's a very good relationship we have. It's a historic one. It's happened over time. We've added value to American companies. We've increased our value. They've got access to the European market, and they did all of that. I understand where you're coming from fully. But I think it's a relationship that we can develop and that will endure into the future, and will change, it will adapt, and you're evolving and you're doing things.
And they've done a very good job. Now, I just will say this, but with all that we've said, we can talk about Ryanair. There's a massive deficit. I don't mean by a little bit. I mean, there's a massive deficit that we have with Ireland and with other countries too. And we want to sort of even that out as nicely as we can, and we'll work together. We're going to work together great, but the deficit is massive. Will you hear this one?
You said earlier that it was now up to Russia in terms of the ceasefire.
Yeah.
Is there anything you can do in terms of pressuring Russia, or in terms of sanctions, or what can you do?
We can, but I hope it's not going to be necessary. Sure, we can pressure. We can do that with Russia. Remember this, Russia took Georgia from Bush, right? They took Crimea from a man named Obama, Barack Hussein Obama, right? They tried to take the whole thing from Biden. They're going for the whole ball of wax. Who was the only one that never took anything from? Trump. And in fact, I'm the one that stopped Nord Stream 2, the pipeline, the biggest pipeline anywhere in the world. I stopped it. It was dead. And then Biden got in and he approved it. Nobody mentions that. What I did to Russia was very tough. I was the toughest ever. But nope, they never took anything from me. They took them from Obama and Bush, and they took it from Sleepy Joe Biden. With Biden, they wanted to take the whole country, but I think I've stopped that, but we'll see. But yeah, there are things you could do that wouldn't be pleasant in a financial sense. I can do things financially that would be very bad for Russia. I don't want to do that because I want to get peace. I want to see peace, and we'll see. But in a financial sense, yeah, we could do things very bad for Russia. It would be devastating for Russia, but I don't want to do that because I want to see peace. And we're getting close to maybe getting something done. We've got Ukraine done, and as you know, I've always said that Ukraine might have been the more difficult party. You were here a week ago when some interesting things happened. I had somebody that didn't seem to want peace. Now he's agreed to peace. So we'll see what happens. Brian?
Yes, thanks.
Thank you.
First, we'll congratulate you on your lower inflation core rates.
Thank you.
Gas prices going down, airline prices going down. This is for the Irish gentleman here, if I can see it real quickly. Welcome, United States. You look great.
Thank you.
Nice suit.
Now you feel good. He knows.
What's coming next?
Ran on MAGA,
Sorry?
Make America Great Again. If you could run on MEGA, Make Ireland Great Again, what would your #1 issue be for people in Ireland right now to make your country stronger? And I've got a 2-part question to that as well.
Yeah. The #1 issue in Ireland is housing, to be honest, and I think it was correctly pointed out. We've got to build more houses. We've got to build them faster to give the young people of Ireland an opportunity to afford to buy a house or to afford to rent a house. We have a lot of other good things happening. That's my #1 priority.
Wonderful.
Are you trying to
And my
confirm,
second
Mr.
part
President?
question to this, Ireland is known for very happy, fun-loving people, great attitude, many in this room right now that I've met. Why in the world would you let Rosie O'Donnell move to Ireland? I think she's going to lower your happiness level.
It's true. Thank you. I like that question.
Mr.
Do you know you have Rosie O'Donnell? Do you know who she is? Do you know who she is?
Yeah.
You better off not. You're better off not knowing.
Prime Minister, are you expecting to inform the President your views on Gaza, considering that you have diametrically opposed positions on the state of Palestine? Your country is one of 3 in Europe that recognizes the state of Palestine. Are you expecting to discuss this with the President? Are you expecting to inform him?
I don't have to inform the President. He's very well clued into the whole situation. We shared the President's, again, unrelenting focus on peace. And he's envoying the President himself, as soon as he came into office, went to get a ceasefire. We've been calling for a ceasefire for a long time. We want to consolidate the peace. That is our fundamental aim. We want the hostages out. I've been saying it from day one. It's a horrific thing to do to take someone as a hostage. And I went to Kibbutz Be'eri after October the 7th in solidarity with Israel, and that gets forgotten. And I went a week or 2 afterwards. I saw the kibbutz. It was a shocking thing to see, even though it was a week or 2 after the horror. It was a village. You could see life going on prior to the attack. It was something that will not leave me. And I've been interested in the Middle East for a long, long time. It's complex, and it's all of that. But we do desperately need hostages out, all of them. It's far too long. Let me finish, please. And then we need a ceasefire. We need to consolidate that. We need a surge of humanitarian aid into Gaza. Because again, there's too many children and too many people starving and so on. Just too many. And it's that humanitarian impulse is what motivates the Irish in respect of its views. And I've always been of the view, it's been our view that a 2-state solution would be ideal. It's become much more challenging and difficult as time has moved on. But that has always been our position. But it's genuinely to have people, because we've gone through this. We discussed this prior to you coming in. We've been through some of this. People hating each other, terrible acts of violence carried out on each other. We came through it. It's our earnest hope that Arab and Jewish people can live side by side. And I've met with people, parents of children who were killed on both sides, called Parent Circle in Israel, and they work to try and bring people together. It's difficult work.
What about the President's plans to expel Palestinians out of Gaza? Are you discussing that with him and giving him your...
Nobody's expelling any Palestinians. I don't know. Who are you with?
I'm with Voice of America, sir.
Oh, no wonder. Okay, Voice of
How he feels about the President just saying that he would like to take back US companies, pharma companies based in Ireland.
Well, I think the pharmaceutical companies in Ireland are doing very well, as the President has outlined. Again, I think it's about that two-way partnership. I understand fully where the President is coming from. I think there's actually room, and we can discuss all this. I think there's room for those companies to grow in America, and many of them, by the way, have already announced fairly significant manufacturing investments now.
It's true, just recently.
Like people like Eli Lilly, for example, who have been a long-standing presence in Ireland since the 1970s. I spoke to the CEO recently.
He's great.
Great guy. And he's announced, I think, about a $50 billion investment in America.
New plants.
But there's big investment, they've had big investment in Ireland. Ireland has served them well too, The workforce is very strong. It's an educated workforce. They delivered well. During COVID-19, a number of CEOs said to me, a lot of the plants in Ireland were the only plants that never closed for a single day during COVID. Not a single day. Productivity is good and so on like that. But look, there'll be swings and roundabouts.
Mr. President, thank you so much. You spoke to Vladimir Putin for quite a while.
Yes.
So I want to know your assessment. When you take this deal to him, how do you assess the chances of Putin?
I have no assessment, and I don't go by chances. I think it makes sense for Russia. A lot of downside for Russia, too. And we have a very complex situation solved on one side, pretty much solved. We've also discussed land and other things that, go with it. We're not just doing it and saying ceasefire. We don't know what's happening. We know the areas of land we're talking about, whether it's pulled back or not pulled back. We've discussed a lot of the details of what has to go because we don't want to be wasting time. We don't want to be wasting time while people are dying. I mean, as we're sitting here, you probably had 2 people die on that very open field. It's dead flat. It's great farmland, and it's dead flat. There's no protection. The only thing that stops a bullet is a human body. And these are bodies that are young people, and they're stopping a lot of bullets because a lot of bullets are flying across those level fields. Dead flat, no protection whatsoever. It is a disaster. And so I hope he's going to have a ceasefire.
You are using the American leverage to get a lot of political issues.
Well, I don't want to get into that, but if I had to, I'm the only one that's dealt with them successfully. Everyone else, I went through it. Bush didn't deal with them successfully, dealt with them terribly, got ripped off. And Obama was a disaster. They have with Obama, he gave them sheets, and I gave them anti-tank missiles. You know that, right? It's called Javelin. You know the Javelin? I'm the one that gave them the Javelins. People don't say that. And then they say, oh, Trump has a great relationship with Russia. I'm the one that gave him the Javelins. Obama gave him sheets. That's an expression. He gave sheets, I gave javelins. So,
Mr. President, how worried should the undocumented Irish be about your administration that you don't round them up and send them away again?
Oh, I think the Irish love Trump. We won the Irish with a tremendous amount of vote. I want to thank you very much. We won in the 80s with Irish. I got the Irish vote. I think I have it locked up pretty good, unless I did something very stupid, like drained your company, your wonderful place of all of its companies. If I drained Ireland of all of the companies, maybe I'd lose the Irish vote. I don't know. But right now, no, I love it. I've been there many times, as you know, yes. And we don't want to do anything to hurt Ireland. We want to, but we do want fairness, and he understands that. No, that's enough, Kelly. Thank you.
Mr. President, it's Irish American Appreciation Month. You've named there. Who's your favorite Irish person?
Oh, there's so many. Are you kidding me? Well, I do happen to like your fighter. He's got the best tattoos I've ever seen. I don't know if I'm a big, but that.
Conor McGregor.
Conor.
Boy, you have. Well, Conor's great, right? Talking about Conor, but you have a lot of great Irish fighters, actually. Great fighters. I don't know what that is, but Ireland's always had a lot of good fighters. You know why? Because they're tough people. They're smart people and they're passionate people. And they really have been, over the years, so many. I think your father was a great fighter, right?
He was, you did.
Wow, and yet, look at you, you're so smooth and so...
He was a very good defensive boxer. He could weave.
He was a really good...
He was a good boxer, yeah. He fought for Ireland, boxed for Ireland. And
yeah. That means you're genetically, I'm not going to mess around. Okay, let's, a couple of more from somebody that didn't ask a question. Yeah, please, go ahead.
Mr. President, should Apple go back to the US from Ireland?
Who?
Apple.
Oh, Apple's been treated very badly. Look, Apple had tremendously bad luck. I thought they had a very good lawsuit, but they lost.
We fought with them.
$16 billion. $16 billion. And they're after a lot of our American companies. See, that's what's unfair. It's a European Union. I'm not blaming you. I'm blaming the European Union. The European Union's gone after our companies. And Apple's a great company, and they have to give $17 billion on a lawsuit that I didn't think was a good lawsuit. No, that's not good. No, the European, we have a problem with the European Union. They don't take our farm products. They don't take our cars. We take millions of cars, BMWs and Mercedes-Benz and Volkswagens and everything. We take millions of cars. I said to Angela Merkel at the time, I said, Angela, how many Chevrolets do we have in the middle of Munich? Why, none. I said, you're right, we have none. That's the way it is, we have none. No, I'm not happy with the European Union, I want to tell you. And,
Will you put tariffs on
we're
cars?
going to win that. We're going to win that financial battle. It's a
Tariffs
financial
on European
battle.
cars, Mr. President? Tariffs on European cars, is that something you're now considering?
Oh, absolutely, I will do that. Yes.
Mr. President,
Think of it, they have millions of cars coming in, millions and millions of cars. One of probably the largest. Japan's very big too, but and they don't accept our cars. We make great cars. They don't have our cars, but we have their cars. They don't have our farm products. We have the greatest farmers in the world. They don't accept our farm products, and we accept theirs. So, you know, things are going to change unless they do what they have to do, and they know what they have to do. This is not going to be a tough battle. In my opinion, not going to be tough. Just like when Ontario charged us, everybody said, oh, they just charged. I said, this will be won in 1 hour. And they announced what we were going to do, and they withdrew their little threat. And what they don't say in Canada is that 270%, have you ever heard that? We have tariffs on dairy products from Canada of 270%, going up to 400%. You never hear that. Canada's absolutely one of the worst. And we, when I say worst in terms of charging tariffs. Their dairy products, they charge our farmers 240, 250, 270, and 400%, okay? Think of that for dairy product. And we charge them like peanuts. You know why? Because we've been improperly run for so many years. I had that all settled in my first term. But then, of course, Biden, you know, he let everything go to hell. One of the things we did is we took from China hundreds of billions of dollars, and I have great respect for President Xi. But he understood that. He understood it was a one-way street, and you can't have a one-way street. Okay. One more question.
Can you say which countries you might target in your next travel ban?
Say it.
Can you say which countries you might target in your next travel ban?
Wouldn't that be a stupid thing for me to say? I said, which countries am I going to target for the next travel ban? Can you believe somebody would ask that question? Well, we're going to talk. We're going to be talking really to the European Union. You know, I will tell you this one little, we'll end it with this. So I have a property, a big property in Ireland that you know well. It's one of the most highly rated hotels in all of Europe. It's beautiful. At Doonbank, it's a beautiful 600 acres on the ocean, and everybody knows it. And we have a beautiful hotel. And I was going to do a project there, a big expansion of the place. This was when I was a civilian, before the presidency, before I even thought about the presidency. But I was going to do a really beautiful expansion of because it does very well. And I got the approvals from Ireland so quickly. They were so professional. They wanted it. You know, it's economic development, it's jobs, it's construction jobs, a big expansion, beautiful expansion. But I was told something that bothered me. They said, sir, you also have to get approved by the European Union. I said, why do I have to go to the European Union to expand a hotel that's in Ireland? They said, well, that's the way it is. I say, well, shouldn't that go fast? They said, no, it'll take at least 7 years. You gave me the approval in about 4 weeks. It was a beautiful professional. If you took 4 years, you wouldn't have done a better job. You know, everything was done environmentally, everything. There's no reason to take very long. I had everything from Ireland in 4 weeks. And then I hired somebody. He said the process will be from 5 to 7 years. And I said, oh, really? And then I found out that they weren't playing games. Now think about how bad that is for your country. So that was my first experience with the European Union, and I dropped the project. I just said, I'm not going to do that. I'm not going to go 7 years to expand something. But I have to, I'll hand it to Ireland. You were so professional, so good. But I don't know why. European Union had to approve it. Yeah. And with them, it was deal. And that's the European Union. So it was a very bad experience I had.
Just say, President, you have the distinction of being, I think, the only president that has physically invested in Ireland.
That's
through your Doonbeg.
And it's been a good investment.
And I mean, for anybody, you should go there. It's just stunning.
I love this.
No, I mean, even if you don't play golf, yeah, I mean, it is a stunning landscape. Yeah. Your people have restored it very well, and our people are going to continue to work with you on that piece to do it all sort of effectively and so on.
They've had a great relationship.
But it is, and the local people, my local councillor Rita McInerney texted me last week to say, tell President Trump to thank his family for the way they've worked with the local community and for the work that they've done.
I love Rory. I think Rory's great. He's a great golfer. He just won 2 weeks ago. He's a great guy. I played golf with him 3 weeks ago. And he's really a fantastic player. He's in good form, too. When he played with me, he played very well, I can tell you. No, Rory certainly is one of the favorites. He's always going to be one of them. He's a very talented guy. He's a very good person, too.
Are you planning to visit Dubai, Mr. President?
I will. I'll get there sometime. I hope soon. In fact, if we meet, we'll meet at Doonbeg. Okay, I would love it. But I hope to be able to get there.
Mr. President, does America have a future in NATO?
What's it?
Does America have a future in NATO?
Well, NATO has to treat us fairly. If they pay their bills and if they do what they're supposed to do. When I first got involved with NATO, as you know, they weren't paying their bills. There were 28 countries, and most of them weren't paying. And I got them to pay. And they paid billions and billions of dollars. I made a certain statement that I'm not going to be involved with NATO unless you're going to pay your bills. And I was asked a question, if we don't pay, are you going to help us? I said, no, if you don't pay, you're saying you're delinquent, a real estate term. You're delinquent. You're not paying your rent. You're not paying your bills. If you're not paying your bills, I'm not going to help. And everybody we took in, your Secretary General will tell you, he was very generous to me. He said, I've never seen anything like it. Money came in by the billions and billions and billions of dollars, and NATO became much stronger. Now, NATO's expended a lot of that money in fighting this horrible war. It's too bad they had to do that, but they had the money from me. I was the one that got people to pay. The countries, most of the countries were not paying, or they were paying a very small amount. So we'll see. But NATO can be a force for the good, absolutely.
Would you like to see Ireland join NATO, Mr. President?
That's up to Ireland.
Would you think Ireland and the EU are too close? Do you think that perhaps, like you said,
we are very close.
No, Ireland and the EU. Do you think there's too close a relationship there? Do you think there needs to be a separation, like you said, if you can't get planning permission when you can get it in Ireland, but you can't get it in the EU? Do you think?
Well, look, I can just tell you about my personal experience. That Ireland treated me very well, and the EU was terrible, and they stopped really a magnificent addition. It wasn't a big deal from the standpoint of the world. It wasn't like the things we're talking about now, but it would have been a very beautiful addition. And they stopped it, which is bad for Ireland. And I don't know why. I don't know why it would take 5 to 7 years to get something approved, but that's what it was. Thank you all very much.
Thank you.
Thank you.
We're headed out. Thank you. All right, headed out right behind you.
There you have it from the Oval Office. President Trump and the Taoiseach, Prime Minister Martin, the Taoiseach, in town, of course, ahead of St. Patrick's Day celebrations, but an interesting bit of timing here with EU tariffs in the air. Of course, a wide-ranging conversation that got to Ukraine, that got to a number of issues, most concertedly about tariffs, with the first European leader in the Oval Office since President Zelensky's confrontational meeting. I'm Joe Matthew alongside Kaylee Lyons in Washington. This is Balance of Power on Bloomberg TV and radio. They held forth, Kaylee, for about 50 minutes. Donald Trump saying that he does not want to hurt Ireland, but he is not happy with the EU, we will put tariffs on cars. He said we will win that financial battle.
Yeah, he also suggested that retaliation for the retaliatory tariffs the EU has now announced in the aftermath of the imposition of 25% tariffs on steel and aluminum that was effective as of midnight today is coming. And he pointed out the trade deficit the U.S. has with Ireland. As we know, he is not a big fan of deficits in the trade variety at all. And I would point out as well that we're going to hear from these two again, possibly, as they are slated for an actual reception in the East Room of the White House at 5 p.m. Eastern Time.
Yeah, this is an annual visit from the Taoiseach, and we are seeing all the trappings that come with it, the Oval Office dance, then they go to lunch on Capitol Hill. The Speaker will take part in that. It's usually kind of a laugh fest, people kind of having a good time, more of a festive occasion. The idea of talking about ending a war in Ukraine, though, and managing tariffs has put a slightly different perspective on things.
Yeah, an actual physical war, as once again we heard the president describe in vivid detail, and a trade war as well as the backdrop to all of this. So for more, we want to turn to our colleague Tyler Kendall, Bloomberg Washington correspondent, who is listening and watching along with all of us here on Bloomberg TV and radio. So Tyler, perhaps no surprise given what we have seen take place in the last several days when it comes to trade, that seemed to dominate a lot of the conversation.
Right, and Kaylee, one headline that President Trump says that there will be very little flexibility when it comes to his tariff plans once that April 2nd date hits. And you've been talking about it. Ireland really in the crossfire here, of course. Ireland, one of the nations with the largest goods deficit with the U.S. of all of our European trading allies. Also a country with a relatively low corporate tax rate, 12.5%. That has caused many U.S. firms to move their production over to Ireland. Think big tech like Apple, pharmaceuticals like Pfizer, jobs that President Trump would like to see back in the U.S. He was actually asked there whether or not he's going to lower the corporate tax rate as far as Ireland's. We know that one of his campaign promises, for example, was to lower it as far as 15% for those companies that do move their manufacturing back to the U.S. He preemptively blamed Democrats for not being on board with his plan, but of course we should note there's many concerns about from Republicans on Capitol Hill about just how they are going to get this done. But broadly speaking, this visit today, Ireland, of course, an EU member state, which really is in the firing line for President Trump when it comes to these tariffs. Just look at how he's doing his reciprocal tariff plan, making sure that those non-tariff barriers, the value-added tax that could really hit the EU is included. And then, of course, the other things that we're expecting on April 2nd, those sector-specific tariffs, including on autos and pharmaceuticals, that will hit the EU, and particularly Ireland hard. We know that their exports of pharmaceuticals are really contributing to that trade deficit.
April 2nd, of course, is the date that so many people are looking towards here when it comes to what the president likes to call reciprocal. I wonder if maybe we hear more about that. Do we have a sense, Tyler, if he's going to take questions again? Will this be a news conference? They're billing it as a St. Patrick's Day celebration when they get back to the White House.
Right, Joe, what timing is this meeting, right? It comes on this huge day of tariffs. Of course, earlier today, those 25% tariffs on steel and aluminum, no exemptions for any countries. And there's been reporting that some leaders are having trouble getting direct lines into the White House to negotiate on the tariffs. And the Irish Taoiseach already had something lined up today. Of course, as you've mentioned, this is an annual meeting. This meeting was already expected and widely on the books. Later today, according to the White House schedule, there's going to be this reception. It was opened up to media, which does lead us to believe that there could be some time for questions afterwards. And we'll have to see, because no doubt there's going to be some tough conversations behind closed doors, even though we saw a rather friendly demeanor during those Oval Office remarks there.
All right, Tyler, thank you so much. Tyler's on her way to the White House for that very moment. Reporting for Bloomberg here on Balance of Power, I'm Joe Matthew alongside Kaylee Lyons. We want to set the baseline on what's happening on Wall Street. Of course, the markets have been such a big part of the political story this week. And of course, since Donald Trump got into the White House, we do have an important conversation coming up ahead with retired General Wesley Clark right here on Bloomberg. Charlie Pellet right now in New York with Wall Street action. Charlie, how's it look?
Right now, we are higher across the board. The Irish Prime Minister at the White House. The color is green across the board right now. The Dow, the S&P, NASDAQ all advancing. Tariff talk not hitting stocks today. Right now, the S&P up 48, up 0.9%, 56.20 where we stand. The Dow up 75 now, up by about 0.2%. The NASDAQ Composite Index up 255, up now by 1.5%. Stocks higher after a two-day sell-off led by tech mega caps following a cooler than forecast February inflation report. The 10-year at 4.30% with the 2-year currently yielding 3.98%. Spot gold up $23 the ounce, now at $29.39, up 0.8%. West Texas Intermediate crude is advancing 2.2%, $67.71 on WTI. Bitcoin now down by 0.4%, 82,480 on Bitcoin. So the Dow, the S&P, NASDAQ all in the green today, but one notable declining stock, iRobot. It is plunging now by 33.9%. It is the maker of the Roomba vacuum cleaner. It is plunging after raising a, quote, substantial doubt about its ability to continue operating. iRobot, by the way, was a one-time Amazon takeover target. Again, iRobot right now down by 33%. Recapping the Dow, the S&P, NASDAQ solidly advancing in the green. S&P up 48, up by about 0.9%. Balance of Power continues, and back we go to Washington once again. Your hosts, Joe Matthew and Haley Lyons.
All right, Charlie, thank you so much for being with us here on the Wednesday edition of Balance of Power on Bloomberg TV and radio, on YouTube, and on the satellite radio channel 121. As we key off the CPI here, that's what Charlie, of course, was just talking about, the backdrop for our markets today, with inflation easing. The headline generated by Molly Smith and her team at Bloomberg Economics. With us in Washington, Molly, it's great to see you at the table. Thanks for being here.
Yeah,
are we jumping the gun on popping corks here? Is the PPI tomorrow, for instance, going to show the first impact of some of these tariffs that we're talking about?
I think the stock market right now just will literally take anything it takes to get in the green, and that this was that impetus today. The bond market clearly not as optimistic as we saw. Yields at first were like, oh wow, we got a good inflation print, maybe we're going to move lower. Now yields have been higher on the day ever since then. So it was a very brief little pause there, and really just tariffs, trade tensions, what you guys talk about here every day, that is very much taking center stage right now. And just the prospect of when this is really going to hit inflation prints more notably, that maybe there wasn't as much pass through yet. Remember, only the 10% on China was the only one that was in effect through February. So there's still a lot more to go. I mean, what did we just have at midnight, right? More on steel and aluminum. So there's definitely more to come, and who know? I don't know that the PPI tomorrow might show that yet. It still might be more of a March data and going forward story.
But if you just look at February ISM manufacturing PMI, it noted, and this is a quote, a dramatic rise in commodity prices as a result of new and potential tariffs. It's not necessarily, Molly, that the tariffs have to be implemented to affect the data.
No, that's so true. And you have seen in some of these other measures like ISM that price pressures have been rising a lot, particularly on the good side again. So it's really, I mean, you have to then wonder how much of it is just companies preemptively raising prices because they know that this is coming. So, and like hearing about the
outlook, they think. None of us
know
for sure.
We all think. I mean, gosh, like what you guys do here every day.
Car prices down, encouraging, I guess, although you have to check that with the idea of auto tariffs, not to mention the impact of steel and aluminum. Gas may be short-lived as we write. How about eggs? Are we done talking about this yet?
The eggs were certainly less of a factor this month than they were last month, but we still actually on our team have like separately used the terminal to look at a measure of grocery prices excluding eggs, which actually that fell by the most since April 2020.
So the new core excludes eggs?
That is the new core, is food prices ex eggs.
Wow.
Yeah, maybe there'll be a new group where it's core is eggs and gas.
Fair enough.
This is not a BLS official measure. This is straight to you from the terminal here.
Well, no, but it's important because that's obviously one of the sticker shock elements that the American consumer is experiencing right now. But to that point, how much of the fact that we are seeing what seems to be a little bit of an easing in the price pressure around eggs is because you're starting to see demand pulling back. You're not necessarily seeing a consumer that is totally flexible on the prices they're willing to pay.
No, that's a good point, and that's certainly something that more of what you're hearing about this discussion about wondering how resilient the economy will be. That's exactly the point there, is how much can the consumer take of this, and when do you start to see demand retreat as a result? That it's, you have to remember, of course, it's not just a supply side story, and when does the demand piece start to hit? And we've been waiting for consumer spending to slow down for a long time, it seems like. You know, a lot of recession calls have come and gone in the last 2 years. A lot of people waiting for inflation, borrowing costs, you know, savings running out. When is this eventually going to hit? It seems like tariffs now are finally adding that extra bit that the consumers really the outlook is much less favorable than it was even just like 6 months ago.
Well, and that'll affect the corporate outlook as well, because their ability to pass on the cost of tariffs only assumes that they can exercise that pricing power that consumers will tolerate.
And that's what, a lot of the airlines and a lot of consumer companies have been talking about so far in these earnings calls. So would think more of that's to come.
All right, and you'll have it covered for us. Bloomberg Economics Editor Molly Smith,
Thanks, Molly.
Thank you so much as we keep an eye on the inflation story and how geopolitics is factoring into it. But I would note, while we did hear about inflation and tariffs plenty in that meeting that we just witnessed in the Oval Office between the Taoiseach and President Trump, we also did hear a lot about the war in Ukraine, with the Irish Prime Minister actually praising the president's efforts to reach a peace deal. Negotiations, of course, active between the U.S. and Ukraine, and now they say the ball is in Russia's court.
Yeah, you might have presumed the ball was already in Russia's court, which is interesting. I'm sort of compelled by this idea that it's a victory to get Ukraine to agree to a truce in a war that it did not start. But that is the rhetoric that we're hearing from the White House right now. We have yet to hear from Vladimir Putin, although indications based on Bloomberg's reporting earlier that he will eventually, I think was the word, Kaylee, sign off on this.
Eventually. I guess it's just a question of timing and what it's going to take to get
what are the conditions?
Him to that point. So on that note, we turn now to our next guest. I'm pleased to say joining us here on Balance of Power is General Wesley Clark, former Supreme Allied Commander for Europe and a 34-year veteran of the United States Army. General, welcome back to Bloomberg TV and radio. If the ball is in Russia's court, what exactly do you think they'll do with it?
Well, they've got choices. I mean, they could immediately agree. Last night, they didn't. As soon as they heard that Ukraine had accepted it, they launched a heavy bombardment, including a ballistic missile strike on the Ukrainian port at Odessa that killed some people and wrecked a ship. So that was one choice. They didn't do that. They could agree in the next few days. The question is, what will their concessions will they require? And what will the administration ask of them other than agreeing to halt the fighting temporarily? There have been ceasefires in the past. They're easy to break. No one's there to monitor it. If you want to take a little bit more ground, you take it. That's what Russia's done in the past on this. So I think it's a good thing that we're moving forward on this, but we just have to count on the administration putting the right pressure on Russia to get a real ceasefire in place, then something that can be monitored, enforced, and has some security guarantees behind it.
Well, General, it's great to see you again on Bloomberg. The conditions we're hearing that Putin wants include a long-term settlement to the war, Ukraine becoming a neutral nation, reducing its armed forces and ceding the territory that Russia has already taken. Does that sound like reality to you?
It sounds like exactly what Russia wanted when they started at the Istanbul agreements. Right. And so they haven't changed their position. No, I don't think Ukraine can accept that. But I think it's important that any agreement be brought back to the people of Ukraine, not something that the president can, Zelensky can simply sign and say, okay, I've signed it, I'm done. You want me to leave? I'm leaving. And here's the agreement. So it's got to come back through the Ukrainian parliament, the Rada. People have to really understand what it means, and it has to be enforceable.
Well, and that gets me back to the point you were just making a moment ago, General, about monitoring, because we also understand that Russia has conditions around what a peacekeeping force could or should actually look like. In your mind, what kind of force is required to actually keep the peace? Would the UK and France trying to go it alone if Russia were able to tolerate a NATO-aligned nations being present enough?
Well, I don't think that you can get a force in there that has any credibility unless it's a NATO force. It doesn't have to be under NATO. It can be a coalition of the willing. How many does it take? You're not going to get 150,000, that's for sure, because Europe can't do it. But if you put 30 to 40,000 in, if you spread them out along the line, if you have the authorities to monitor what's going on the Russian side, if you can do inspections, for example, if necessary, and if you put penalties in, and if you only gradually release sanctions and calibrate the release of sanctions to Russia's compliance and stretch out the release of sanctions over at least 3 years, that's how long the war has lasted, and if you haven't given up permanent ownership or legal occupation of these provinces in Crimea, because you can't allow borders to be changed by force under international law. So there's a lot of things that have to be done to make this workable, and it's going to be very tough to get Russia to agree to that, I think.
Well, of course, you have unique experience here as Supreme Ally Commander Europe of NATO. Your experience in Kosovo. You actually have a sense of what Europe is capable of here, General. Can you describe that to us?
Well, right now, at least as of when I was in Europe last week, they were hopping mad at the United States. And I don't think they're going to get over this right away. Their question is the United States still a reliable ally? If you're a reliable ally, how could you not side with the victim of aggression and seem to be more friendly with the aggressor? And what does that mean for our security? Because in their view, Ukraine is fighting for Europe's security. And it's got the strongest army in Europe, excluding Turkey. So there's a lot of concern there. Can Europe do more? Yes, but not instantaneously. Could Europe put 15 or 20,000 soldiers? Sure, especially if Poland is willing to put some of its forces up there. But people in Europe are very, very wary of Mr. Putin. He's made his intentions very clear, and they're under gray zone assault with sabotage and bombings of aircraft and murders of former intelligence officers and cables cut. They have no illusions about what Mr. Putin's ultimate design might be. Maybe President Trump can change all that. But it's not just Putin. It's, 3 centuries of legacy of Russian imperialism, reaching beyond its borders, intimidating, attempting to gain control of neighboring countries. And so everyone in Europe is wary about this. They've relied on the United States, and now that reliance has been put in jeopardy.
Just quickly, General, we only have a minute left here, but how important is it that the U.S. has once again started resharing intelligence with Ukraine and allowing aid flow to continue?
I think it's very important, but we don't know the details of the aid flow. I hope they'll just flush it and put it all in there. But I was told that even before this happened, it had been sort of choked down, so Ukraine wasn't getting much. I don't have the details on that, and I know Ukraine is working to sort of straighten this out. But yes, the intelligence is critical, and so is the U.S. military assistance.
General, it's great to have you back. Thanks for the insights, as always. That, of course, is Wesley Clark, former Supreme Allied Commander, Europe. I'm Joe Matthew, alongside Kayleigh Lyons in Washington, as we keep our eyes not only on the White House today with the Taoiseach visit, but on the Capitol as well. The Prime Minister of Ireland at a Friends of Ireland celebration, Kayleigh. This is an annual rite in Washington, spending some time with the Speaker and the President of the United States, among others.
Yep, President Trump just going to greet Mike Johnson. He's now at the podium himself after we heard the Speaker say that they're facing a new dawn for America's bilateral relations. Of course, part of that new dawn includes different trade relations with bilateral trading partners around the world, and we'll continue to have that covered in the late edition of Balance of Power.
Yeah, that might come up at the East Room event they'll hold together. Starts, they tell us, at 5 p.m. We'll find out together. Join us on Bloomberg TV and radio.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
And a very good afternoon, everybody, live on radio, TV, YouTube, Bloomberg Originals. This is Bloomberg Business Week for this Wednesday, March 12th. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters. Man, we're bouncing around here on the U.S. equity trade.
Higher, lower, higher now, but off our highs of the session. But we'll see if this green sticks to the close, Carol.
Yeah, and we did get a positive and surprising inflation print. We're going to talk about that. We have had the S&P hovering around correction territory once again. So we're going to get more on the trade, as Tim mentioned, and all that is happening in the markets. First up this hour, we do want to ask, did the Fed's job get maybe a little bit easier? We'll get more on today's inflation print and maybe a bit of relief when it comes to higher prices.
Yeah, we'll see what Stuart Paul has to say about that. Plus, the U.S.-Canadian trade war is underway right now. What's going on in Mexico, by the way, Carol?
Yeah, exactly. There's so much going on. Also, we're going to get a global view on Trump policies with a former British trade official. He has advised members of the European and British parliaments, really takes a global view. What we want to do, kind of a little mini think tank, what might be the end game of the policies coming out of the White House?
And the $5 trillion stock wipeout that's rattling America's big spenders.
Yeah, so important to the U.S. economy. Hey, first up, let's get a check on the Wednesday trade. For that, we toss it over to Charlie Pellet.
Hi, thank you very much. Good day to you both. We've got the Dow lower now. Been that kind of a day, choppy trading. The Dow in the red, but the S&P, NASDAQ, they are both advancing right to the numbers here. S&P up 20, up by about 0.4%. 55.93 where we stand on the S&P 500 index. The Dow lower by 63 points, down by about 0.1%. The NASDAQ Composite Index holding on to a gain of 160 points right now, up by about 0.9%. The 10-year 4.29% with a two-year yield 3.96%. Spot gold is advancing $20 the ounce to $29.35 on the precious metal. That's an advance right now of 0.7%. West Texas Intermediate crude is rallying 2.2%, 67.70, and Bitcoin down 1%, 81,967 on a Bitcoin. We've got mega cap tech shares advancing following that cooler than forecast February inflation report. More on that in a moment. But right now, Tesla is up by 7.4%. NVIDIA among the names, the tech names advancing up 5.7%. Meta Platforms up 1.9%. Alphabet up 1.4%. And Apple is retreating now by 1.9%. So again, recapping here, techs for the most part advancing. S&P up 25, up by about 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We do want to kick off this hour with more on today's inflation print. U.S. consumer prices rose at the slowest pace in 4 months. That was in the month of February, offering some reprieve ahead of tariffs that are expected to drive costs higher here in the United States. The BLS saying nearly half of the advance, though, in the overall measure in February was due to shelter costs, but it is still decelerating from the prior month. So we wanted to get more on the print, and we've got a great person to do just that.
Yeah, back with us is Bloomberg Economics U.S. economist Stuart Paul. He joins us here in the Bloomberg Business Week studio. A good inflation read. Is there a big caveat here, Stuart, that it's came before the tariffs have really kicked in?
That's the first caveat. Yes, they came before most of the tariffs kicked in. We get the big retaliatory tariffs on April 2nd. Of course, Trump doesn't want to do it on April Fool's Day. I think that the other thing to keep in mind with this report is that most of the disinflation came from things like core services, excluding shelter, some of the super core services indexes, things like airfares, where there was a big seasonal factor dragging down airfares. Now, we know the demand for air travel hasn't been super robust. We heard guidance from Delta. We also could just see the TSA numbers. But when you have such a big seasonal factor in play, accounting for so much of the month-to-month disinflation, I sort of discount today's reading. And then beyond that, we do have goods, core goods, excluding autos and including autos, boosting inflation, both headline and core. And when you have core goods boosting inflation as opposed to providing a minor amount of drag, which it typically does, we should be a little bit concerned. Add on top of that used auto prices continuing to rise during the month, And when you think about auto supply chains and auto manufacturing and tariffs coming against Canada and Mexico, you have to be a little bit concerned. Add on top of all of that,
Wow,
the final
there's
caveat,
a lot of additions. I'm just going to point out.
How many caveats are there?
Somehow I go deep into the details, and I always find, the opposite of a silver lining. But the one final one that I would point out is that inflation actually became more pervasive if you count the number of core spending line items that are seeing excessive inflation right now. Disinflation and deflation became less pervasive during the month. So again, there are a lot of caveats that we actually have to keep in mind when we look at this report. It's going to be a really long last mile to the Fed's 2% inflation target.
Is that why initially I think we saw yields back off, but we've moved off. I know we also had a Treasury auction today, but you've got what, a 10-year right now yielding almost 4.30, 4.29, and I'm looking at the shorter end of the yield curve, of course, most sensitive to what we might get from the Fed, 397. So is that why we are seeing yields higher, or what's your thinking there?
There was a little bit of a treat in rate cut bets. We did see a full 3 cuts for the year priced as of last night. Today, after the CPI report, we got just about 68 basis points, or just a touch under 3 cuts fully priced in. I think that that's a part of it. Looking at some of the details of this report, it's not the most inspiring report. And when we have tariffs coming, while we have goods adding to inflation, it could be a little bit of a problem.
Was the market reaction to this report incorrect in your view, the equity market reaction?
Look, I mean, it's going to be tough for a classically trained economist to say that the market is wrong, but
you are allowed to comment. We're giving you the
Is that because the market is never wrong?
The market is never wrong. I think that the retreat in rate cut bets is probably the right move.
Okay.
I think that when you start looking at equities, you have other things that are in play, including earnings guidance and so on.
So is the Fed meeting next week, right? Second of the year. Is their job getting more difficult based on what you say, all these caveats in the inflation print reminds us that inflation, it ain't over. And then you've got tariffs being loaded on. So are they in a tricky spot? At the same time, we do see signs of growth slowing down.
Yeah, so the Fed is in a tricky spot. Tariffs make it especially difficult for the Fed to achieve its dual mandate because you have 2 things that are going on. You have upward inflation pressures that are coming from input costs as a consequence of the tariffs, but a sort of rebalancing of the economy that comes with the implementation of tariffs can be demand destructive. So the extent to which those higher input costs can then get passed along to consumer prices isn't abundantly clear quite yet. And we know that firms are going to try to pass along those costs. The question is just how much demand destruction there is.
You mentioned the airlines, the disinflation that we saw in the airlines and the numbers today when it comes to airline prices. We saw that play out yesterday with the market reaction to Delta and American Airlines coming out and updating their guidance because of soft consumer demand. Given everything that we've seen just in the last couple of weeks, in your view, how's the consumer doing? How is the economy doing?
We do see higher prices weighing on consumers. We do see it in discretionary spending categories. One thing that was especially difficult to judge starting in January was the effect of weather. Consumers did pull back across the board, but one of the reasons why spending was so terrible in the month of January is because auto sales were down. Nobody wants to spend their time walking an auto dealer's lot during a polar vortex. Auto numbers were back up in February, and we can expect to see some improvement in retail sales. That'll come on Monday. Still sharpening our pencils there, but overall, it does look like consumers are pulling back quite a little bit. We do see credit card defaults, auto loan defaults, all on the rise. And for that reason, we should expect consumers to show a little bit more precautionary savings in the months ahead. And when you see consumer sentiment and buying plans retreating, you would expect that to be reflected in subsequent months in actual spend.
We are going to talk at the end of this hour about the wealth effect. And I am curious if you guys are also, you and the team, sharpening your pencils over the idea that with all the volatility that we're seeing in the equity markets and stocks pulling back, fairly dramatically here in 2025, that for those who are the wealthiest sect of our economy, who spend a lot in our economy, there are some concerns about that having an economic impact.
That's right. So, of course, there is a wealth effect that works in both directions, right? So for every additional dollar in accumulated wealth, you could expect a few cents of additional spending for those who have the most exposure to equity markets. Stocks retreating nearly 10% off the all-time highs. I think that the thing to, though, keep in mind is the accumulated wealth since the pandemic. It's still something like $50 trillion in accumulated wealth since the pandemic.
Right.
Yes, what we've seen over the past couple weeks puts a dent in it, and it will make the upper end of the income distribution a bit more cautious in their spending behaviors. Is it the sort of thing that's is that negative wealth effect enough to derail spending completely? Probably not, and there is still plenty of credit that can smooth over any sort of bumps in the road.
Real quickly, 20 seconds. PPI, what do we need to know?
Keeping an eye really on PPI for airfares, hospital costs, physician services, because that's what ends up going into core PCE spending. But based on what we have right now, Fed's favored inflation index, the PCE price index, should have a relatively favorable reading at this point based on what we know about February.
Great stuff, as always. Stuart, thank you so much. Bloomberg Economics U.S. economist Stuart Paul. All right, so while the latest U.S. inflation print may ultimately cause some relief ahead of U.S. tariffs, the tariffs are happening, Tim.
At 12:01 a.m. this Wednesday morning, President Donald Trump's 25% tariffs on steel and aluminum imports came into force. It triggered concern across export-reliant Asia and immediate reprisals from the European Union and Canada as the global trade war enters a rocky phase. Carol, meantime, Canada announced new 25% tariffs on about $20.8 billion of U.S.-made products, including steel and aluminum.
Yeah, indeed. And these retaliatory measures by Canada will also apply to consumer items such as computers, sporting goods. They match the U.S. tariffs dollar for dollar, and they're going to take effect at 12:01 a.m. New York time. All right, so let's get an update on this tariff trade war between the U.S. and Canada as it relates in particular to the metals market and industry. Back with us is Bloomberg News metals and mining heavy machinery reporter Joe Doe, an expert on this space. So, all right, not 50%, 25%. How does that change any of the conversation like that we had with you yesterday?
I think it goes back to what most of the market was expecting, what most buyers were anticipating, and what producers were anticipating. And to be clear, none of them wanted this on either side. Well, I mean, American steelmakers probably did to some level, but people actually making business decisions are saying, okay, well, at least we got what we were planning for the past month or so. I think that's the first part. The fact that the 50% did get walked back allowed for people to breathe. I spoke to somebody in the market today in the steel market who said, yesterday was hectic, but today I'm getting almost no phone calls.
And are they making trades?
Well, they're in the service center space,
Okay.
so they don't trade,
Got it.
but they do supply important end markets in the United States.
Can you just, fortunately at Bloomberg, we have a great feature on the terminal where I can go and look at this chart from our Bloomberg economics team that has tariffs and when they were enacted and what's expected to. That's super helpful for me because I'm having trouble keeping track of all this.
It's helpful for me too.
Okay, remind us why these were implemented in the first place and what the off-ramp for these are.
The Trump administration put 25% steel tariffs and 10% aluminum tariffs into place back in 2018 as a part of his initial move on trade. In the years since, the United States gave exemptions to various countries and various products for these imports for various reasons. And many of them were approved under the Trump administration and others were approved under the Biden administration. Trump sat down in the early part of his term and probably was even having conversations before he got into office in which the steel lobby and various individuals in the aluminum lobby said, you got to get rid of the exemptions because they're no longer having the impact of giving more production and more profit to the producers inside the United States. So he clearly sat down with his advisors and said, we're going to re-implement it with no exemptions. And by the way, we're going to bump up the aluminum tariff to 25%.
But is this related at all to border crossings or fentanyl, or is there an off-ramp for these in the near future?
Section 232 is what
so then
implemented
it's national security.
Right. So I think a key thing, right, and this is a great question, right, is he knew and his administration knew that the Section 232 tariffs in 2018 had been tested in the courts and they had stood up. Because Section 232 was implemented under Kennedy, right, and gives the authority to the President of the United States broad-reaching power to implement tariffs on imports that they deem threaten national security. So under that umbrella, they were able to re-implement that statute with the 25% tariff and pull off all the exemptions. That's why this in particular had nothing to do with the Mexico, Canada, across the board tariffs. That's why this one went into effect. And for the most part, people in the markets, in the steel and aluminum markets said, okay, well, maybe we're not pumped with this, but at least we know how it works.
Well, do they feel like that's it? Because the reason I asked you about
Right.
the trade, and you're right, it was
Right.
not the right companies to be asking, but one of the things that stuck with me from what you said yesterday, that the folks that are trading in these markets are afraid to even make a bet because
Right.
it's just things change, and it's not just weekly changes, monthly changes.
Yeah.
It's like hourly changes.
And it's largely because of the President of the United States coming out and saying unexpectedly, we're putting tariffs on all imports from Canada and Mexico.
Right.
And then days later saying, actually, we're going to delay that. And then later on coming out and saying, we're going to do something called reciprocal tariffs. These are things that people in my markets that I cover, steel and aluminum, that is like a totally different component that was not on their radar, that they had to start figuring out what it actually meant to their markets. And as I said to you guys yesterday, the anecdote of the person putting on a copper trade, right?
That's right.
That was, oh my gosh, okay, so we think he's going to put import tariffs on a lot of things, and we think copper might be one of the things. And the President of the United States comes out at the end of January and says, steel and aluminum tariffs are coming back on, and by the way, we're going to do copper too. Well, suddenly you see the price of copper go up. That trader says, great, that's a good play for us. And then by Monday, the President of the United States comes back out and says, actually, we're going to walk a few things back, including copper, which we might have to do a Section 232 investigation on. So it's unclear that we might actually do this.
Oh, go ahead.
So these traders are saying that's the uncharted territory. We know Section 232 for steel and aluminum, but all these other tariffs are new, and they're coming under things like IEEPA, like trade tariffs that weren't actually put into place the first time around.
Right.
So the Trump administration this time around has delved even further into books that were dusted off. I mean, Section 232, I had trade lawyers tell us in 2018, we didn't know what Section 232 was. We had to actually go back into the stacks to read up everything to understand
Because it
if
hadn't
it was
been
possible.
used in a long time.
And listen, I spoke to Wilbur Ross a month ago and asked him some follow-up questions on this, and he did make the point. He's like, remember, Section 232 was tried in the courts and was upheld. And he knows that is one tool he has in his back pocket that he can go through with.
The president does.
The president of the United States. And that's what we saw go into effect last night at 12:01 or this morning at 12:01.
So essentially, the new tariffs that have been imposed this week, they've been tested. The mechanism has been tested in the courts.
That's
so
right.
These are in the view of the Trump administration. These are safe. These are good to go. These won't be challenged.
Probably so. That's probably how they feel. Now, the question is, will they walk some of it back? In other words, will they go into exemptions? That's unclear to me, but we did have reporting in our main bar story yesterday that we knew of a meeting between Alcoa, the CEO of Alcoa, Bill Opplinger, some Rio Tinto officials, and the U.S. Aluminum Association president, in which they sat down with the Commerce Department in the past couple weeks, telling the Commerce Department you need to not implement the aluminum tariffs on imports from Canada. Now, they had the conversation, which at least indicates to the market that they're listening to people. So maybe they end up giving exemptions, but as of this point, Trump made it very clear we're not giving any exemptions. And remember, the biggest people who are against exemptions are the U.S. steelmakers. Nucor Corporation, Steel Dynamics, U.S. Steel, and Cliffs all came out with a letter on Friday and said, Mr. President, do not give exemptions because that will just undo everything that we have here.
Don't ever go away. No, it's complicated. As Tim said, we're trying to keep up to date on what's new, what's old, what's on top of each other, because it makes a difference in terms of the implications for the industry, for companies, for costs, for inflation, for the economy. Thank you. Bloomberg News metals and mining heavy machinery reporter Joe Doe, who is never going to leave us.
He better not. Hey, in the meantime, we did get a headline crossing the Bloomberg terminal. Mallinckrodt Pharmaceuticals and Endo are exploring a potential merger that could be valued at about $7 billion. People with knowledge of the matter said.
Yeah, Endo shares looks like they're bouncing around right now, up about 7.5%. You are listening and watching Bloomberg Business Week. We do a deep dive, kind of our own little global think tank. That's coming up next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow little changed, S&P, NASDAQ both advancing. The stock rally is waning as tariffs cloud the path of inflation. S&P right now up 31.5604. That is a gain of 0.6%. The Dow down 17, down by about 0.1%. The NASDAQ Composite Index right now is surging 207 points, up 1.2%. The NASDAQ 100 Index up 1.1%, and the Russell 2000 Index of small cap shares up by about 0.5%. The 10-year 4.30%, with a 2-year that's currently yielding 3.98%. Gold up $18 the ounce to $29.34, up by about 0.6%. And West Texas Intermediate crude oil up 2.1%, 67.65 on WTI. Mallinckrodt Pharmaceuticals and Endo are exploring a potential merger that could be valued at about $7 billion. That, according to sources. Endo shares are up now by 1.1%. And Chevron is looking to replace Venezuelan oil at its refineries with supplies from Mexico, Brazil, and the Middle East after the Trump administration ordered the company to shut operations in the South American country. Chevron shares today, they're a little changed on the day, down less than 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, with a lot continuing to come out of the White House and Trump administration regarding tariffs, geopolitics, and so much more, we wanted to do a deep dive into how the United States' relationship with the world is changing short term and possibly longer term, and to try and really suss out what President Trump's end game and agenda may be when it comes to the global role of the U.S. government. And to that, we turn once again to Ed Price. He's a former British trade official, now non-resident senior fellow over at NYU. He has advised members of the European and British parliaments, writes regularly about politics, economic policy, and more, just tying it all together. And he joins us here in studio. Welcome.
Well, thank you very much, Carol. How are you?
We're doing okay, like trying to keep up with the headlines and make sense of it all. And I think we, too, are all trying to think longer term. Change, disruption, we talk about it all the time, can be good. And we'll get to that in just a moment. But you have a recent column you wrote about for Barron's, and you get into how President Trump's rise marks the end of a long progressive era in the United States. And you seize on, at least you kick it off, the column with something that the president said in his recent joint address to Congress, saying he wants the United States to be the most dominant civilization ever to exist on the face of this earth. So what is he striving for? What is he in your view?
In my view, he is a good thing for America, the nation, and America, the democracy, because everybody's talking about America and the democracy, and we're sitting here doing this again.
Mm-hmm.
And he is potentially a very bad thing for the Republic and the Union and the United States. And it might seem strange to make that distinction because as things stand, we very often think of those things as the same, right? We will say USA and we'll say America interchangeably. And as I tried to argue in this column, I may be wrong, I think that Trump's absolute structural purpose, his foundational purpose, is to split those two things in half, to get them away from one from the other.
Explain how he does that and what that means. People might hear you and say, wait a second, these things sound like something that are inextricably bound.
So they're not, in my opinion, right? 1776 is the moment that the American nation was born, and it was born of breaking the law and defying a king. So that's the rebelliousness, right? That's the flags on the back of pickups. It's great. It's all American. 1789, when the Constitution is ratified, is the moment that we chose to be legalists and chose to be a republic. Alexander Hamilton in that interim was saying, look, should we have a king, right? And there were arguments about how powerful the president should be. These arguments have never been resolved, and we saw with Nixon, we saw with Kennedy, the imperial presidency, because again, we haven't decided as a nation what exactly our republic is for. So if President Trump truly wanted to create a presidency with unlimited powers, he wouldn't be able to do it within the existing 1789 United States framework. He would have to somehow appeal to the 1776 animal spirits, to misuse a term, of the nation.
So is that where Doge comes in your
Doge,
view?
goodness me. So Elon Musk is supposed to be a genius. He doesn't realize he's the fall guy, right? He's the fall guy. He's going to be ousted at some point. When Doge goes too far, which it will, probably into entitlements, Trump will need to...
Which is what they are dealing with
which is what they want to do as we speak. Trump is going to need someone that wasn't confirmed by the Senate to get rid of quickly, and that's Musk. And I think we saw Musk on Fox the other day sweating it a little bit with Kudlow because it looked like he's starting to realize that maybe he's in trouble, his businesses aren't doing very well, and so on. So Doge is the kind of battering ram. It's like the vanguard that's seeing how far, like a test balloon, how far this stuff can go. And when challenged, Musk will be quite easy to peel off.
But when is, because I think it's safe to say that some have thought government has gotten really big, and there's some security in that you don't move fast and break things that maybe shouldn't be broken. But at the same time, it's very easy to get lazy over existing structure, and waste does get created. And, whether it's, so what's the balance between good efficiency and disruption, especially in a government like the United States?
Well, I guess there's 2 points, right? One is that whether or not the American people want a big government is debatable. That's why we have elections. Whether or not the Americans want an all-powerful government was already decided at the aforementioned Constitutional Congress, right? Mm-hmm. So I'm very careful to try and prize away an efficient government from the size of the government. Donald Trump wants a smaller government, which he then says is more efficient. So those of us who are worried, and this is the second point, those of us who are worried about fiscal and debt will go, okay, that makes sense. But that's disingenuous, because what he actually wants is a more powerful government. He wants
a concentration of power.
A concentration of power.
Yeah.
So Lord Acton famously says that power corrupts, and absolute power corrupts absolutely. I think power accumulates as well, and this is what we should be watching for.
I want to go back to what you said about Elon and Doge, because I think a lot of people have been proven wrong over the past few months when they said, this is a honeymoon that is going to end badly. These two look pretty close at this point. And given Elon's status as the wealthiest person in the world, he proved in this election cycle that he's incredibly powerful with helping to elect people.
And you're saying he might be there longer than I think?
I think I am, yeah. Just because he has the resources, and he has said he wants to use these in other parts of the ballot.
So the president, with respect, has a long and storied history of using and discarding people. And I don't think that Elon Musk, for all of his wealth, is...
I mean, there are many books written by those people who one could describe have been discarded.
There's a library of people that have been let down by the president, shall we say. I guess I'm contending, I mean, I concede to you that maybe the time is something I couldn't possibly forecast, but I think the function of putting Musk into this thing called Doge is that he's easy to get rid of. He's easy to point out later and say, this guy made these mistakes, not me. Right? And at that point, he's gone.
So when you hear things like Canada, and this is something I think we all too are asking ourselves, again, what is the end game here, do you think, in terms of President Trump?
Honestly, I mean, I might regret saying this, okay, maybe this is my last appearance on your show, I don't know. I think he's serious. I think he's serious.
Canadians are. If it ever comes off kind of jokey on air, I'll be honest with you, we've had people reach out and say, hey, this is serious. We don't think this is a joke.
I think it's dead serious. I think Donald Trump's vision is a big Sharpie around the entire of North America, including Greenland, with Trumpland written on it. And I think that there's some strategic sense to this, right? Because of the world of, you look at the Second World War, it was just who can get the biggest load of resources in one place. And if you look at Russia and China, they kind of have Eurasia on lock. So it would strategically make sense for the North Americans to converge together, if not for the fact that we don't behave like that. And the very reason for this country is law. As I said, 1789. So the 1789 edition of the United States cannot annex Canada, right? It tried, it failed, it didn't work. But the sort of pre-1776 bubbling rebelliousness of the nation might. And I fear that he's, as I say, dead serious.
If he's dead serious, are you saying or predicting that he might, in fact, try to make Canada the 51st state?
I don't know that he would make it the 51st state. I feel like that's a meme. But I think he would try to bring...
He talks about it all the time.
He talks about it all the time, and he well might, albeit I imagine that the Republicans would never be elected again because all of my Canadian friends are pretty liberal. I don't know how that works, right?
Yeah.
But I think that what he wants is some control over the North American hemisphere. It's almost like the Monroe Doctrine is being extended north and being extended north at the expense of these polities that already exist, in particular Denmark and Canada.
If we go along with your thinking, and some others think that he too is not kidding, is it something that could happen without U.S. military action?
Well, I mean, at some point, the Canadians would not be happy about this, right? I mean, you can't tell a sovereign state, you now belong to us.
Right.
Others have tried that in history, Napoleon, Stalin, Hitler, and it never ends well. So I think that the US military would have to, at some point, invade. I mean, this again, it's like amazing to hear yourself say this on a live stream. So I don't think Canada...
But to be fair, the president has talked about it, so
He's talked
we're
about
kind of carrying it out, like how this might happen.
Sure. I think it's not impossible. I mean, you could come in from Greenland. We have bases there.
We're Bloomberg. We got to talk markets big picture and the way that they have responded to big picture President Trump's policies over the last few weeks, or what they view as his policies. Do you think it's fair to say that the equity and bond markets have not necessarily been a check on the president?
He said it himself, Tim, right? You don't look at the stock market anymore.
Yeah, but I mean, he said a lot of things.
He said a lot of things.
Do you take that to heart?
I think he's unrestrained. I think at this point, he's not thinking about popularity in the way that he has previously. Something has changed in his demeanor.
Well, he's not running for re-election, so...
I mean...
Let me rephrase that. He's not supposed to...
He's not supposed to run for re-election. Again, there's this whole thing...
But this goes back to law, law versus...
This whole thing. This is whole thing. I think he's fundamentally trying to reshape North America. I think Russia is a distraction. Of course, we have to talk about markets, right? So I don't want to pivot away from that.
Yeah.
But the question for me is, China, is he getting ready to hand Taiwan over per Ukraine?
And full credit to our producer, Cece, because she said, you know, as we were planning for this, about how Trump and his cabinet have signaled that they're content to sit back on Taiwan and China. U.S. Treasury Secretary Bissett even said he doesn't see China taking action against Taiwan in this term. So what does this messaging tell you? Is this ceding ground on global democracy? Should we feel confident that Trump's presence is enough of a deterrent? Only got about 45, 50 seconds.
Democracy is okay because we voted for him. The republic might not be. And this is what I mean. It might be that there's a period of massive populism in this country, including the ceding of Taiwan, and democracy in Taiwan is in trouble, but in this country it's doing pretty well, and that's a real head-scratcher, right? Because we may choose to abandon democratic allies.
But democracy would continue here.
Democracy here, I think, for a while, yep.
I'm going to squeeze in one more question, because your column ends with, all of this political disruption doesn't necessarily mean the end of an era, but rather the beginning of one. 25 seconds.
Said it before, Trump wants some sort of empire, some sort of imperium. I don't know if he would brand it like that. I don't know if he would be honest like that. But at core, he wants to solidify power, move himself to center stage, and create some kind of autarky in North America.
Always an interesting perspective and view. Ed Price, thank you. So appreciate you coming in. Senior fellow, non-resident at NYU, former British trade official right here on Bloomberg Business Week. We continue in just a moment watching the markets, and also, speaking of Doge, we get to the latest on that. That's next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks higher across the board now with the Dow, the S&P, NASDAQ all advancing. S&P 500 index up 40 points right now, up 0.7%. The Dow back in the green, up 37, up 0.1%, while NASDAQ is up 239 points. The NASDAQ Composite Index now up by 1.4%. The NASDAQ 100 Index up by 1.3%. The 10-year 4.31%. The 2-year 3.99%. The rally in stocks losing a bit of steam as bond yields climb. Spot gold up $19 the ounce, $29.35 the ounce, up 0.7%. And West Texas Intermediate crude is rallying 2.3%, $67.77 for a barrel of WTI. Bitcoin down 0.3%, 82,569 on Bitcoin. The average 30-year mortgage rate has declined for a 6th straight week to the lowest level since early December. According to the Mortgage Bankers Association, it is now at 6.67%. Among some of the home building names, Toll Brothers up 0.4%, KB Home down 1.1%, and Lennar now lower by 1.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, we talked about Doge in the last segment. Elon Musk's Department of Government Efficiency, or Doge, has sent 3 individuals with private equity and finance experience to the Social Security Administration to focus on rooting out waste and fraud. The billionaire presidential advisor has called entitlement spending, and that includes Social Security and Medicare, a key target for cuts, arguing that the federal programs are plagued by fraud. He, Musk, addressed the moves yesterday from the White House lawn.
We're going to be very careful with any interruption to benefits. In fact, only by tackling the waste and fraud in entitlements like Social Security, Medicare, can we actually preserve those programs for the future. Because with unchecked fraud and waste, we won't be able to afford them.
That's Elon Musk yesterday at the White House along with President Trump. With the latest on Doge activities, we wanted to check in with Bloomberg Intelligence's senior policy analyst, Nathan Dean. He's in our Washington, D.C. bureau. Nathan, good to see you this afternoon. When Elon and when President Trump talk about waste, fraud, and abuse in Social Security and Medicare, what exactly do we know about the preponderance of it?
Yeah, so there's not a ton of information. I mean, obviously, anecdotally, Elon Musk and President Trump like to give stories about, in his joint address to Congress, President Trump mentioned that somebody was older than the nation itself, but those are just anecdotal. There's really not much systemic information that we have going off of at the moment. And from the investment perspective, one of the reasons why we want to pay attention to this so quickly, or so importantly, is because, if President Trump and Elon Musk want to balance the budget or to decrease the U.S. deficit, they're most likely going to have to tackle these entitlement programs. But we just don't know the scale of it. And from a political perspective, tackling things like Social Security, Medicare, and Medicaid has always been the third rail of politics. So we're not exactly sure. Doge is still in the early stages of going after these programs, so to speak. They're still doing a lot of work, rather, at the agencies in terms of employees and programs there. But we do think eventually they are going to look greater at Social Security, Medicare, and Medicaid. We just don't know to the full extent how much of it is going to be fraud, waste, or actual business as usual activities.
That's what I wanted to ask you, Nathan. So, how much of this is going to be, forgive me for following in this way, but fraud, waste versus, hey, if you make a certain amount of money, even in your retirement, you're not going to get Social Security benefits, even though you paid so much. Tell me, what are they thinking in terms of, or we don't even know yet?
I don't think they know yet. I mean, I think they're just getting in there and trying to see what the data says. And I would just remind folks that for a lot of Social Security, Medicare, and Medicaid programs, it would take an act of Congress to change really the parameters of Social Security, for example. Now, obviously, there are things that the president could do. There's things like the rescissions packages or reconciliation, but you can't even touch Social Security via reconciliation. It has to go through appropriations. So for a lot of this, you would have to have 8 Democrats on board, and obviously they're not going to be on board with whatever suggestion President Trump or Elon Musk is saying for these programs. So I think what you'll see is over the next few weeks and months, you'll see more anecdotal stories of waste and fraud that they can point to, perhaps this 300-year-old person who's living somewhere, and just say that this is what they're cutting. But ultimately, for these bigger changes, the things that Republicans need to either pay for these $4.5 trillion in tax cuts or to lower the deficit, you're going to need Congress, and that's going to be a battle playing out later this year outside of the Doge committee, so to speak.
We also did hear in that in that clip that we played from Elon Musk, him say, with unchecked fraud and waste, we won't be able to afford them. Just to help fact check that for us. Can we afford Medicare, Medicaid, and Social Security?
Well, I think, pretty much, I think most traders, at least the ones I talk to, one of the biggest questions I get, whether it's in New York, London, or anywhere, the traders will ask me, when is Washington going to get serious with the deficit? And my response back to them is, when is the market going to tell Washington that there is a concern?
Yeah.
And so, Washingtonians, especially those over on Capitol Hill, are still proceeding as if the deficit is not much of an issue that needs to be addressed. Obviously, Elon Musk disagrees. But what the Doge Committee is doing is they're looking at the areas within the executive branch right now, laying off half the workers at the Department of Education, for example, but you're never going to get to the types of savings that Republicans will want, either for deficit or to pay for these tax cuts, just from looking at the agencies. They're going to have to go after Social Security, Medicare, and Medicaid at a certain point. And just a reminder, President Trump has said he's not going to touch any of that. He's only going to touch the waste and fraud. To us, that doesn't seem like there's really going to be much in the way of cuts coming anytime soon.
No, but you bring up a good point, right? How much we've talked about the debt and servicing that debt, how much it is of GDP, and it's been growing. But if you can somehow knock that down ultimately, right, there's more money to spend actually on services, infrastructure, what have you, in the U.S. economy.
Yeah, absolutely. I mean, obviously, I think, most of the clients that we talk to are very concerned about the debt and the debt rising. I mean, interest payments alone has gone up dramatically over the last couple of years. But, Congress has always just been in this standpoint where they really can't negotiate in terms of big cuts. I mean, there's really no agreement because you need a bipartisan act of Congress to do it. We're seeing this play out just this week. On Friday, we potentially may have a government shutdown. This is over a 6-month continuing resolution, not Social Security, Medicare, or Medicaid, things that are much more important to the economy than just keeping the government open for 6 more months. So it's much easier for Congress to say, let's kick the can down the road and let's have that discussion. But President Trump and Elon Musk, via the Doge work that they're doing right now, is trying to bring some very awkward questions to Congress and to Capitol Hill, trying to ensure them that they get some movement here. I'm just not exactly sure they will.
Okay, we've been talking about the idea of potentially a recession quite a bit this week. Another word similar, though, is rescission in the context of a rescissions package. When we were preparing for this conversation with you, you said, keep an eye out for a rescissions package. What exactly is that?
We had to Google a little bit, too. I'm just going to be honest with you.
Exactly. I mean, this is a little wonky here, but, the president does have the ability to offer a formal request to Congress and say, look, I noticed that you have not spent this money. Therefore, I want you to rescind it. So let's say that you're in the clean energy space and there's IRA, Inflation Reduction Act money, or CHIPS Act, semiconductors. If there is CHIPS Act money that has not been spent yet, President Trump could go to Congress and say, you know what, forget about it. Let's just rescind that money. Last time this happened was 2018, and it failed because a lot of Republicans at the time were still kind of on the fence about whether we should rescind some of these, industry boosting, funding. So I do anticipate later this year, this idea is going to gain some traction. Senator Lindsey Graham has been talking about it. So President Trump can come back and say, look, if you haven't spent the money, let's rescind it. And just to remind folks, this doesn't go through the filibuster. This just requires a majority vote in the House and a majority vote in the Senate. So if you get all Republicans on board, a lot of those unspent monies could be clawed back and you won't see it.
So does that mean every, 4 years, basically, if one president puts in some spending programs and the Congress at the time approves it, it just takes another president, or maybe it's every 2 years, that things can just be reversed?
Well, Congress always has the right via an act of legislation to reverse it. I mean, we saw this during the COVID relief funds. A lot of the CARES Act money, there was about $250 billion in COVID relief funds that was never spent. So a future Congress just said, hey, we've got this $250 billion sitting over here. Let's earmark it for something else. So this does happen very often, but this rescissions package is a little bit different. And one of the challenges is going to be, and let's just take the Inflation Reduction Act, or even better, let's take the semiconductors with the CHIPS Act, for example. There's a lot of bipartisan support for this. That bill passed 2022 with a lot of bipartisan support. And so if you are going to go back and say, right, we're going to claw back some of this money, a lot of those individual lawmakers who have plants in their districts that are being built off of this, may say, yeah, I'm just not going to support that. We're going to have to do this another way.
Yeah, I mean, ultimately, all governing is local, right? Like,
Yeah, if you
it
think
comes
that
down to it to some
some
extent.
members are getting a tough time in their district from
Yeah.
constituents now, just wait until funding gets cut for some of those programs.
All right, Nathan Dean, great stuff. Bloomberg Intelligence Senior Policy Analyst Nathan Dean. Still ahead, the $5 trillion stock wipeout that threatens the wealth effect. That's next.
You're listening to Bloomberg Business Week with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, you are back watching and listening to Bloomberg Business Week. Carol Masser, Tim Stenovec here. It's never been easier for everyday Americans to trade stocks, and for the past 2 years, that's largely meant one thing, and that is making money, Tim.
About the recent U.S. stock plunge coming as President Donald Trump's chaotic trade war rattles investors in corporate America's C-suites, has shattered the notion that stocks only go up. And that has complications and implications for U.S.'s big spenders. With the tell is Claire Ballantyne. She's Bloomberg News personal finance reporter, and she joins us here in the studio. You look at something in this story that we talk a lot about here at Bloomberg, and that is the wealth effect, which of course is caused by gains in the stock market and other investments. It's something that's really important to the U.S. economy.
It is. Really, the basis of the U.S. economy is the consumer spending. And, you know, we see the wealthiest people spending the most. And it's really been propping up the economy in recent years. And so I think that's what we are trying to get at with this story, is that if that is threatened, then it could have really bad implications for the economy overall.
You talked to in this story about platforms that make it probably more accessible than ever for Americans to easily trade, and also see those fluctuations day to day. I mean, there are times I pick up an app and I'll check out what's in my 401k and stuff, but you know, you can just so easily check on things. How is that kind of impacting maybe how some of the wealthier spending folks out there, how they are feeling about things.
Yeah, so there's, these apps have made it easier to trade, but they've also made it easier, as you're saying, to check how much money you have and how much you've lost.
I was going to say how much you don't have sometimes.
So on days like, Monday and Tuesday when stocks are plunging, it's super easy for people to log into their accounts and to see. I mean, if you think back to, your 401k, it's a little bit harder, but with apps like Robinhood, you just tap right in. And so it feels really bad when you see these massive losses, and that affects your attitude towards spending, your future plans, and we're already seeing that with people.
I think it's notable what we saw this week happen with airlines when they came out, American Airlines and Delta came out and revised their guidance lower. And I thought to myself, people plan this stuff quite a bit in advance when they're consumers, not when you're traveling for business, but when you're traveling as a consumer. And if you don't feel as wealthy, then maybe you're not going to plan that trip during, fall break next year.
Yeah, and especially right now, this is really the time when people are making their summer travel plans. And so, these people that I talked to for my story, they were thinking about that.
What about the idea that, and we talk about this quite a bit, who owns the stocks in the U.S. market, or who owns the stocks even globally? And we often do hear that the wealthiest Americans are the ones who do control the most stocks. Are we seeing that democratized at all thanks to the rise of these apps that allow people to buy and sell stocks just with the tap of a finger?
Yeah, we're definitely seeing more people that have stocks because of all these accounts that are being opened and all of that. And I think then they can see their losses. Maybe they're losing money. Maybe it'll go back up, but at least for now. So this sort of feeling of pessimism is more widespread now because more people have a stake in the market.
Claire, tell us about what Bloomberg does so well, you do so well, is when you guys actually talk to different individuals. What did you hear specifically?
I was really struck by just how quickly the vibes had changed with these people. So, if you look back, the most recent all-time high was February 19th. And even in that short period of time, the people that I talked to, they said they were worried. Yeah, they're investors. The people that I talked to for this story had broad-based index funds. These aren't people that are taking risks on, levered Tesla bets. These are just people with money in the market. And even they, in the short period of time, are saying, I'm worried about tariffs. I'm worried about my investments going down. I'm worried about being able to, buy a house. My down payment's in the market and it's crashing.
Well, I mean, to be fair, we're only down 10% roughly from those all-time highs.
And how much are we up like in the last 2 years?
Oh, yeah, 2 years in a row of double-digit gains. So if people think this is a crash, then they haven't lived through a real crash.
No, and I think that's very true. And I think that's it shows how easy it is to have an emotional response to this. But as we know, so much of spending is emotional.
Well, I love this one anecdote. You talk about SGH Wealth Management, the founder there. He said he was just starting to get the first wave of people getting concerned. He said he met with a woman earlier this week who has put more than half of her portfolio in NVIDIA stock. And so,
I mean, if she did that 15 years ago, then she's fine.
That's a good point. He said, though, she's like a deer in the headlights, though. So you're right. Like, it depends. Right? You have to have context and perspective. If she's been in it for a few years, she's like, all right.
It's all good.
Exactly.
Yeah, it all depends on when she got in. I mean, that's the case. And it's, one person I talked to, they said that they had more money in cash, but when the Fed lowered rates, they saw the yield on their savings account decrease and thought, I should put money in the market. So that's, 6 months ago, less than 6 months ago. And so that's pretty rough for them.
I guess the point is, like, when does a stock rout actually start to make people really get nervous and pull back and stop spending? You're smiling.
I mean, we're basically at September levels in the S&P 500. So,
but the vibes are bad.
The vibe, that is so true, the vibes, and that is a really important point.
No, on a rally, you've got to have perspective about, like, how much something lost, right?
Yeah.
But then, and on a loss, you have to have perspective on how much something has rallied over a certain time period. Claire, thank you so much.
The psychology.
No,
it's what it is.
You're absolutely right. Claire Ballantyne, personal finance reporter here at Bloomberg News. All right, for those watching on TV, the close is coming up next. Tim and I continuing right here on Business Week.
CBS News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. During a meeting in the Oval Office with the Prime Minister of Ireland, President Trump was asked about his latest tariffs, European retaliation, and whether Ireland would be included in his response. CBS's Stacey Lynn reports.
Of course I'm going to respond.
President Trump said when asked if he would retaliate with more tariffs.
The EU was set up in order to take advantage of the United States.
And he said Ireland was included.
Of course they are. I can't, I have great respect for Ireland and what they did. And they should have done just what they did. But the United States shouldn't have let it happen. We had stupid leaders.
He said the EU treats the U.S. very badly.
European Union's been very tough. And it's our turn.
Stacey Lynn, CBS News, Washington.
The latest report shows inflation slowed last month, but prices? CBS's Jill Schlesinger tells us they've remained mostly the same or higher.
Prices for food at home were up by 1.9%. If you go out to eat, prices going out 3.7% higher than a year ago.
The Education Department is laying off half its employees in what's seen as a first step in doing away with the department. Becky Pringle of the National Education Association.
They cannot shut down the Department of Education without the votes in Congress, and we have to tell them no.
CBS's Caitlin Huey-Burns.
The agency says that they will continue to service core programs of the department, but this is